of us, this $60 gadget is all you need.
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl?
Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
And so within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Friday, July 17, 2020. I'm Carol Masser along with Jason Kelly. And one of our most read stories on the Bloomberg today, we're going to start there. It has to do with BlackRock Chief Executive Officer Larry Fink warning of a bipolar economy, which, as Jason and I have been thinking about as we were getting ready for this show, may help explain the disconnect between Main Street and Wall Street. And it also may help explain why we have an equity market that can't make up its mind today. So we have a lot to talk about over the next 4 hours. Let's get you going, though, on this Friday with a check on the trading day. Here is Charlie Pellet.
And I thank you very much. It is a mixed Friday right now. The Dow lower, S&P, NASDAQ, they are both higher. Stocks drifting, mostly higher. Trading is thin. A lot of people perhaps heading to the beach. Investors also digesting this week's initial burst of corporate earnings, economic data, and coronavirus news. S&P up now, edging higher by 6 points, up by about 0.2%. We've got NASDAQ up 14, higher by 0.1%. The Dow is down 47. That is a drop of about 0.2%. 10 years down 3/32, yield 0.62%. Gold up 0.7%, 18.10 the ounce. West Texas Intermediate crude down 0.1% right now, 40.69 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I know, Carol, you're going to say the show starts at 2. I was here.
Really?
Was I? But does anyone really know? You know. That's the problem is you actually know. You can see me. You're the only one who can see me.
It's not a perfect world. Technology still trips us up every once in a while, but we've got you, which I'm so glad.
But here we are.
We have a lot going on.
We do have a ton going on. Let's get right into the Business Week agenda if we can. We got the team assembled, sort of our Friday team in many ways, to help us assemble and assimilate and synthesize this week. Vincent Signorella with us, just down the road from me, global macro strategist for Bloomberg. On the phone from White Plains, he, of course, contributes to the Macro Squawk Desk. It's a real-time curated news service that audio streams directly through your terminal. Check it out at Squawk Go. Dave Wilson also with us, as he is every day. Most every day we can grab him. Stocks editor for Bloomberg, author of The Chart and the Stock of the Day. Dave, I want to start with you. What do we need to know about this trade?
Well, I mean, you saw some early weakness in stocks, and then things kind of bounced back, and we're kind of stuck without a direction here. As much as you could say Netflix is a standout in today's trading after their outlook didn't go over so well, it hasn't really been enough to move the market, which is a reminder, as much as you can plug Netflix into the FANG stocks, Facebook, Amazon, Google's owner Alphabet, that's the kind of company they keep, but they're much smaller than the other three. I mean, smaller is kind of a strange word for a company that's valued at $215 billion. Right. Nonetheless, by today's standards, it's still not all that big, not really enough to carry the market. And you say beyond that, you can point to pluses and minuses on the earnings front. BlackRock, I know you're going to be talking about that company later on, sort of a plus as far as their results were concerned. And on the minus side, you got a couple of banks, State Street and Regions Financial, notably. In the story in both cases is that they're just not able to make as much as they could in the past, from being able to borrow from their depositors in effect and then lend out, through loans and investments. So, you put that all together and it adds up to, not a lot of direction at this point.
So let's bring in Vince Signorella. So Vince, talk to us about the trade today, because we do feel like, investors don't quite know which way to go with the equity markets. And bring in something you shared with me yesterday, taking a look specifically at the tech world and asking whether or not it's peaked.
Yeah, we were looking at the NASDAQ 100 ratio to the Russell 2000, and the last time it was at these levels was literally December of 1999 to June of 2000, and we know how much fun it was trading the NASDAQ if you were short during that period of time, because it was the peak for a long time. And it is interesting, though, one of the readers who emailed me this morning, a fellow from Kaiser Partners, Roman, I'm going to try to do this right. I know, Carol, you're a stickler for this. Roman Franger said to me that one note, though, that he pointed out that the NASDAQ earnings per share in that period was at minus 161, and the Russell was minus 58, and now it's plus 317 for the NASDAQ, but the Russell is still on the negative side. So perhaps there's still a little bit of room to run in tech. But you never can really call a top to these things. It's one of the things I said in the story yesterday. If you've called many tops in your trading career, you're not reading this right now. So
that's right.
You just take all of this stuff with a grain of salt. But it was interesting to note that, we just haven't been back there in 20 years, and that definitely has to get your attention.
So, Vince, as you contemplate probably a scotch in not too long, as you think about your fellow traders contemplating whatever
Vince,
their drink of choice is. No, listen, I just call him like I see him. Vince, tell me I'm wrong. Tell me I'm wrong.
Well, actually, I've switched into vodka lately.
So, wait. So, Jason, you're wrong.
I was wrong. Well played. What's the cocktail talk after this week as you're talking with your buddies?
Well, it's really looking forward to next week. We've got the EU summit this weekend. If you listen to the ECB's Lagarde, she has an ECB package built into their forecast, which I think is terribly optimistic of her. You've got earnings really starting next week, and then you get FANG the next week after that. So you can almost see that in trading today. Volume was very low compared to the 30-day average. Everything's just drifting around. I don't think anybody's making any big bets on this today. We're going to see how this plays out next week, and hopefully we get a rebound after we saw Michigan sentiment kind of nosedive this morning. Yeah. Definitely not the confidence numbers you're expecting to see coming from the consumer.
Yeah, not a lot of confidence out there. All right, what's your vodka of choice?
We're on Belvedere, I think, at the moment. If I'm allowed to say that.
It sounds like a tour, Vince. It sounds like a tour you're taking.
We're on,
We're on Belvedere right
next
now.
stop, Belvedere. Doot, doot. Anyway, all right, Vince Signorella, thank you so much. Dave Wilson, last word to you. Give us a tease for the chart.
We're going to look at tech stocks, but not just U.S. tech stocks. The ones in emerging markets, too. We'll see how they compare.
All right, going global. Dave Wilson, we'll talk to you at the bottom of the 3 o'clock hour, right around 3:30, for your chart of the day, and just after the close of trading for the week for the stock of the day. Carol?
We've been talking a lot about tech stocks, so looking forward to that. We definitely have a theme of diversity and inclusion in our world, which the business world, the political world, the investment world really cares about. First up, we're going to hear from Stacey Abrams. She's the Georgia state legislator. She became the first black woman in U.S. history to win a major party gubernatorial nomination. She's going to sit down with our Kevin Cirilli, so that should be a interesting conversation considering everything that's going on in Atlanta and Georgia.
Well, and she is a constant presence in every Veep Stakes conversation. So
yeah.
I have a strong feeling Kevin Cirilli is going to ask her about that. Another friend of the show coming back, Michael Moe, co-founder of GSV Asset Management, longtime player in Silicon Valley. He's got a boot camp for entrepreneurs with a focus on minority businesses. We know it's a problem in Silicon Valley, and we're going to talk about that too with Tony.
Yeah, he's a partner at Comcast, or was a partner at Comcast Ventures, then GV, formerly Google Ventures. He's got his own firm now, and he's going to talk about VC in a world that is calling for diversity and change. So I'm looking forward to that. He's been writing about it and talking to folks about it. And then we've got two other voices really on that as well. Jim Weber, CEO of Brooks Running. We've talked with him before. And JL Alexander. She is the CEO and owner of Black Girls Run. They're going to talk about the future of running, something you know about, Jason Kelly.
I know something about it, although my back is hurting right now. I didn't get to go running this morning, so if I'm at all grumpy today, it's I didn't get that.
I'm grumpy too, so it'll be the two of us.
Oh, boy. Look out, folks. You've been warned. All right, let's do the Bloomberg Business Week Bite of the Day. One number that tells us a lot. Today's number, 747, Carol.
Yeah, the Queen of the Skies is being grounded. British Airways, the world's biggest operator of Boeing 747-400s, is retiring its entire fleet of the jumbo jets with immediate effect because of the damage the virus has done to air travel. Qantas is among other carriers to recently retire the 747, offering farewell joy flights above Australian cities earlier this week. I've flown them. I've been on that upper tier. I love it. I'm going to miss it.
Best. Me too. All right, let's get to Washington now. Nancy Lyons is there with World and National Headlines. Hey, Nance.
Thanks, Jason. Well, mask wearing continues to be a flashpoint during the pandemic. Georgia is a case in point. Governor Brian Kemp is defending his lawsuit against the city of Atlanta over its mask ordinance.
Mayor Bottom's mask mandate cannot be enforced, but her decision to shutter businesses and undermine economic growth is devastating.
His lawsuit follows a trip to Atlanta by President Trump, who did not wear a mask. Atlanta Mayor Keisha Lance Bottoms offers this reaction.
What I see happening is that the governor is putting politics over people.
Kemp says the lawsuit was filed, quote, on behalf of business owners, their employees, and hardworking Georgians throughout the region who continue to struggle to make ends meet. Not guilty. That's the plea from Gregory and Travis McMichael and William Bryan, the three men accused of murdering Ahmaud Arbery while he was running through a Georgia neighborhood. They were formally charged today after a grand jury indicted them last month on 9 counts, including malice murder and felony murder. Charges were filed against the men more than 2 months after the incident and after the release of cell phone video. An independent investigation is underway after more than a dozen women who once worked for the Washington Redskins accused staffers of sexual harassment and verbal abuse. Emily Applegate says she was a victim. She spoke on NBC's Today Show.
Nobody deserves to be degraded and treated like that. Nobody deserves to be disrespected.
The NFL says the allegations are serious and disturbing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser, and I love this story. I saw this go by on Twitter earlier about this New York City luxury building, a whole series of luxury buildings, actually, where people really signed up. They moved in for the amenities, and now all the amenities are closed. We're talking about pools and, notably, Pelotons.
Yeah, exactly. I mean, it talks about specific individuals who moved into apartments, as you said, Jason, because they wanted all these perks. And his rent, we're talking about folks who are paying, what, $5,000 or more a month for rent. And then all of a sudden it's like, yeah, sorry, you can't use the pool. Yeah, sorry, you can't use the Peloton or the gym. Like, so what are we paying for? It's kind of in some ways, what the discussions we're having around schools in many ways, right? Colleges, like, why am I paying so much if I can't actually be there and tap into everything there is to offer? Why are you laughing?
Because my favorite detail in this story is this line: in addition to emphasizing safety standards, 50 West, one of the buildings, has tried to make up for lost perks. They've given out free jigsaw puzzles and screened art house films that couldn't make it to theaters during the pandemic. I like the screening the art house films. That's cool, although socially distanced in the little theater. A little worried about that enclosed space. But can you imagine, like, you wanted to work out in a Peloton or swim in a saltwater pool, and they're like,
and you give me
hey,
a puzzle?
Here's a puzzle. Have fun. See how quickly you can solve it. I mean, I like puzzles when you go to the beach. It's fun. I'm guessing that's a Masser family tradition as well. Seems like that checks out. Maybe Carol very focused on a puzzle over the course of the week. I'm just saying.
Yes,
Could happen.
yes.
But yeah, a puzzle's not going to quite cut it if I'm paying $5,000 plus.
Well, and it's interesting because landlords are saying, listen, we're not going to reduce your rent because they are saying or arguing that their costs are rising as they respond to the pandemic, and that it's much more expensive, in terms of the care for the building. So I got to say, though, I would be like, yeah, maybe you need to give me back, I don't know, something, if I'm not tapping into everything that a building has to offer.
Or maybe at least two puzzles.
Could it be, or a giant puzzle?
Maybe a giant
Something like
puzzle.
that.
Gold puzzle. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, mixed Friday. The U.S. stock market, though, the S&P on track for its third weekly gain. Stocks drifting mostly higher. Thin trading as investors digest this week's initial burst of corporate earnings. We heard from a lot of the big banks, also digesting economic data and coronavirus news. S&P up 11 now. That's a gain of 0.4%. The Dow is down 17, down by about 0.1%. NASDAQ up 38, higher by 0.4%. 10-year down 3/30 seconds with a yield of 0.62%. Gold up 0.7, 18.10 the ounce. West Texas Intermediate crude down 0.2%. 40.66 a barrel. Again, recapping light volume, S&P up 11, up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Jason Kelly. And really, we look forward to this every week, Jason and I do, and that is when we get a chance to check in with Dr. Ian Lustbader, who is Clinical Associate Professor of Medicine at NYU Langone Medical Center, once again joining us on the phone in New York City. Dr. Lustbader, nice to have you back with us. And this is on a day where we've got New Jersey's virus transmission rate rising to the highest level in weeks. Arizona seeing its infections accelerated, and yet we've got New York, City set to enter its final reopening stage with some restrictions come Monday. Depending on where you are, you get a very different story when it comes to the virus. What do you make specifically, though, of some of the spikes that we've seen throughout the country?
Hello, Carol and Jason.
Hello.
Hope you're having a good day. Well, I think what this tells us is that there's a lot of regional variation. I think it tells us that New York, even though initially hard hit, in some ways sort of the pattern is similar to the 1918 Spanish flu, where there were these pockets and kind of waves of viral infection. And I think it shows that staying at home and sort of that lockdown approach and masks worked well. Hopefully there will not be a big second wave in New York. That we don't know. As people return and as schools open and so forth, there may be another wave. But certainly the rest of the country could have and should have sort of learned those lessons by instructing their population to follow a similar approach with social distancing and avoiding large gatherings and bars and really wearing face coverings whenever you're outside your home. That would have, I think, really reduced the number of cases, and now we're certainly seeing a surge on the hospitals, which definitely strains a number of the healthcare systems, and certainly to some degree the rise in cases is in part with more testing, and we can talk about that, but unfortunately there is a rise in hospitalizations,
Right.
which is not a good sign.
All right, let's talk about face coverings if we can. It's become a political issue, to say the least. I have strong feelings about it that I try not to just promote on the air necessarily. Ian, what's the science?
Exactly. I think we always have to go back to what is the science, and everything has some risk and nothing is perfect in life. Going out has a risk, investing has a risk, everything has a risk and a potential benefit. But we do know that much viral transmission is in these droplets and carried in secretions. So certainly there is some data that the virus may live for a time on hard surfaces, and certainly the pores of the mask, really any mask, are larger than the virus. These viruses are, submicron level, and they easily pass through. But generally they're clumped in secretions, and the masks are really very effective. And you get a much less transmission rate if everyone is wearing a mask. So you're certainly reduce your risk if you're wearing a mask, but you really reduce your risk if the other person is wearing a mask. And so I think the data is really clear, and it's unfortunate that it's a political issue. It's really more of a prudent issue, just like you don't want to go out without insurance. For the foreseeable future until we get this under control with vaccines, that's really all we have. They're simple methods, but they're reasonably effective.
So as a clinician, as someone who understands and has seen, virus cases, firsthand, does it frustrate you, some of the debates that are going on around the country, whether it's governors versus, mayors, states versus cities? Does that frustrate you?
Yeah, it really is unfortunate because I do think, we do need leadership and based on science, really politics has to step aside, for this. We always respect individual freedom, but, it's yelling fire in a theater. Individual freedom is up to a certain point of putting other people at risk, and that really is not okay. And so I do think, Bill Ackman said this, I think, back in February or early March, shut everything down, wear masks, and I think that is certainly the correct approach, and I think there is a reasonable approach for sort of a national mandate, for this, at least for some time period. It's a little late in the game, and I think cases are certainly going up. There's a big reservoir of people who are infected, many young people, with really few symptoms. And we do see that, not everyone, and that's really the reason we don't want anyone getting infected, because even some young people can get more sick, get more ill, and be hospitalized. But there seems to be a big pool of asymptomatic carriers that really is causing a rise in the number of infections. But I would just say everyone needs to wear a mask or a face covering outside, certainly for the foreseeable future until we can be patient and get a vaccine, which I think is coming down the pike reasonably soon.
Right, and we're going to talk about that because I want to get your take on it. We've talked with a few CEOs. We had a great cover story in Business Week magazine this week about what's going on in Oxford. There was a Goldman Sachs report. Carol, I'm not sure if you saw that earlier, talking about the chances of a vaccine here in the United States before the end of the year. And I have to think that may be one of the things that's underneath the positive side of the market trade today, because obviously we know that is going to be a game changer. We're going to continue our conversation with Dr. Ian Lustbader, our go-to doc, clinical associate professor of medicine at NYU's Langone Medical Center, joining us as he does most weeks on the phone from New York City. Carol.
Yeah, and I do feel like it's been a week where we've seen a lot of progress, or at least a lot of news. I mean, we talked with the Inovia Pharmaceuticals CEO, but a lot of news related to a vaccine specifically. And I do feel like there's some momentum picking up. And also the idea of a timetable, I feel like it's getting clearer and clearer. So we'll continue with Ian Lustbader, Doctor, Clinical Associate Professor of Medicine at NYU Langone Medical Center. You're listening to Bloomberg Business Week. Carol Masser along with Jason Kelly, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Dr. Ian Lustbader. I want to get his take on all this vaccine news we've had this week, Carol, because he's always really good about saying, all right, here's what you need to understand about this vaccine versus that vaccine and the administration and the timeline and all that.
And I really felt like from our conversation with the CEO of Inovio that you're going to need multiple vaccines to get this done. So I am looking forward to continuing this conversation. Let's get back, though, to the world of business. Charlie Pellet, where should we start?
Let's start with vaccines. That's what we're talking about right here on Bloomberg Business Week. A shot in the arm today for shares of Moderna. They're up now by 15.4%. Goldman Sachs analysts are forecasting the first vaccine for COVID-19 could be available in the U.S. later this year. Analysts say the potential for Moderna to file interim results with regulators from a 30,000-patient trial due to start by July 27th is underappreciated. Again, Moderna up now by about 15.2%. A Washington Post ABC News poll finds 6 in 10 Americans disapprove of President Trump's handling of the coronavirus pandemic, with more than half of the public saying they disapprove, quote, strongly. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
It's incredibly disconcerting to see the level of cases that are coming up in places, and more importantly, the lack of real responses to get those case numbers down. This is not the way you deal with a pandemic.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Netflix shares, they're trading lower after a disappointing subscriber forecast. Netflix down now by 7%. Uber Technologies is pledging to double black leadership by 2025, becoming the latest tech company to answer national calls for racial and economic justice with measurable goals. Uber shares, they're down by 0.6%. They're based in San Francisco. Crosstown rival Lyft shares, they're up by 0.1%. It is a mixed Friday, on track for a winning week. Another winning week, 3 in a row on the S&P, up 10 now, a gain of 0.3%. The Dow's down 34, down 0.1. NASDAQ up 30, up by 0.4%. 10-year yield 0.62%. Gold up 0.7%, 18.09 the ounce. West Texas Intermediate crude down 0.4%, 40.58 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Let's continue our conversation with Dr. Ian Lustbader over at NYU's Langone Medical Center. Ian, I got to ask you, with all these vaccine headlines flying by every day, driving the market often higher over the course of the week, Carol's doing her imitation of vaccine headlines flying by, just so you know. What do you make of it? You know, we're here at the end of the week. Where are we when it comes to the vaccine? Separate sort of the signal from the noise here.
You know, I think there's definitely encouraging progress for sure. You know, there are several in phase 3, a number in phase 2, and we have approximately 130, 140 different companies working on vaccines. And we really have sort of a limited number of ways to make a vaccine based on the body's immune response, which is typically antibodies, made by B cells, and then a cellular response, what's called sort of a T cell or cellular response. There are a variety of approaches and quite complex mechanisms to recognize foreign invaders. But I think these vaccines are encouraging because they use different technologies and elicit different immune responses, and we'll have to see which seems to elicit the most long-lasting and most effective immune response. But I think many are really on the way, using innovative technology like the messenger RNA that Moderna is using, or DNA, or viral adjuvants. There are really a number of different approaches, and it may turn out that given the number of people that will need these vaccines, you may be getting one of several vaccines as we see distribution and what's available. Unfortunately, I think these are certainly several months away, and a lot of damage can occur in the economy, and a lot of damage can occur in people while we are waiting for those. So I think they're probably within 6, maybe 9 months away, maybe a little bit sooner than that. Yeah. And part of the issue is typically we test these on people and wait for them to get the infection. So one of the ways to accelerate that would be to give people a vaccine and intentionally expose them to coronavirus, which brings some ethical issues. You know, given the fact that some people die with this, is it really ethical to expose people to a known pathogen, you know, even if they sign a consent form? But that
what do you
would
think?
be one.
What do you think about
Would you
that?
do it? Would you do it?
That's a good question. I definitely am in line for a vaccine. I would certainly participate. Would I willingly get exposed to a known dose of coronavirus? That's let me ponder that. So I'm not going to answer that.
That'll be next week's segment, Ian.
Well, one thing I do want to ask you, the San Francisco Chronicle has a good story out. I just saw it, I think, across Twitter, and it says, disturbing new revelations that permanent immunity to the virus may not be possible have jeopardized vaccine development and reinforced a decision, at least by scientists at UCSF and affiliated labs, to focus exclusively on treatments. Do you think it's smarter for us because of that, right? And you said vaccines elicit different immune responses. Should we be focusing more on treatments that you're going to get the virus, but we can figure out how to treat you, whether it's a minor case, a moderate case, a severe case, and we can keep you alive?
We need both. We need absolutely better antiviral medications, something like perhaps an oral remdesivir or something like Tamiflu, oseltamivir, that we use for influenza, which can really reduce the severity and length of an infection if given in time. Ideally, it would be great to get treatments that prevent either attachment of the virus or replication of the virus. So I think we need multiple arms. And as we said, those vaccines, we don't know how long-lasting or how effective the antibody response will be. It may be a seasonal vaccine that every year you need a booster, and the virus may mutate. We don't think the spike protein, where most of the antibodies are being developed towards, will mutate that much. But this virus has already mutated, and most coronaviruses, RNA viruses, do tend to mutate. So we can't put all our hopes on a vaccine. I think it's critical. But we really need better antivirals, not only for this, but for future infections, whether it's Ebola. Pandemics occur. This was a bad one. Hopefully, we've learned many lessons from it. At some point, there will become another one, hopefully not more severe, but maybe. And I think we need to take this time to really aggressively prepare, because it is only a matter of time before another one comes along.
All right. Always get smarter listening and talking to you. Thank you so much. Dr. Ian Lustbader over at NYU's Langone Medical Center joining us on the phone in New York City. Carol?
Yeah, great stuff as always. And I always feel like, as you said, Jason, that we learn something and really kind of take the week overall when it comes to the vaccine and the virus and just make sense of it before we head into the weekend. All right, you are listening to Bloomberg Business Week. Carol Massar, Jason Kelly on this Friday. Let's get a check on world and national news headlines. For that, it's over to Nancy Lyons in our D.C. studio. Hi, Nance.
Hey there, Carol. Supreme Court Justice Ruth Bader Ginsburg says her cancer has returned, but she has no plans to leave the high court. Bloomberg Government's Jordan Rubin says she's faced a variety of health issues in recent years.
Justice Ginsburg is a 4-time cancer survivor. She's also been in the hospital for other issues, not cancer-related, which she noted her other recent hospitalizations, for example, to remove gallstones and to treat an infection, which we also learned about recently. She said those were unrelated to cancer.
A Supreme Court vacancy could give President Trump the opportunity to appoint a third justice to the 9-member court. Daily case counts of coronavirus are now beyond the first round of infections this spring, and some cities are floating the possibility of a second round of lockdowns in order to get a handle on the coronavirus. They include Houston, Los Angeles, and Miami. In a new document prepared for the White House Coronavirus Task Force, 18 states are in the red zone of fast rising cases. The memo recommends those states consider mask requirements, as well as the closures of bars, restaurants, and gyms. The Pentagon today says it will ban displays of the Confederate flag on military installations in a carefully worded policy that doesn't even mention the word ban or the specific Confederate flag. The memo offers a list of the types of flags that can be displayed at military installations. The Confederate flag is not among them. President Trump has flatly rejected any notion of changing base names and has defended the flying of the Confederate flag, saying it's a freedom of speech issue. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser here with you. And Carol, I believe you kicked off the show talking about what?
Would you get a vaccine? Would you take the vaccine and then have the virus purposely put in you?
You know, I don't know. I think one of the things I was thinking about it after I asked Ian that question, you know, I think I would want to go through a bunch of tests to determine whether I might have an underlying condition that I don't know about. Because that's the scariest thing, I think, for people, especially younger people. I would put myself in the young-ish category, maybe.
You believe what you want.
Yeah, exactly. But that notion that you may have something that you don't know about that could trigger a really severe case, that's what I would be most worried about.
Yeah, right, because that's the one thing that's tricky about this is, probably not. Isn't that terrible? I would definitely donate my blood and plasma if I had it, because that I know would help, but I think I'd be, I think we don't know enough about it. And I know that there are longer-term consequences of, you know, you get this and things that stay with you.
My aunt, who is a nutritionist down in Atlanta, works at Emory University. She is participating in a vaccine trial. So hats off to her.
Hi, Vijay. Yes, you have to check description. We do work from 8 o'clock until 10 o'clock UK time. So if you will check, you can follow us every day from this time. Yeah, you can copy our trades for free. So you don't have to pay anything at all. Use your own broker, okay? If you want to use our strategy, you have to get it and all information in our description, okay?
On the inequality piece that we talk about, the economic inequality piece, whether we're talking about companies, whether we're talking about people, whether we're talking about different minority groups versus the more affluent, it's a big question as to who comes out how on the other side of this.
He talks about it being a bipolar economy and that you need to have all aspects of the economy to heal in order for us to have a recovery. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P, NASDAQ holding on to gains. The Dow remains lower for the most part. Stocks pushing higher in thin trading. Investors digesting this week's burst of corporate earnings news, economic data, and coronavirus developments. S&P edging higher, led by gains in utilities, healthcare, and real estate, up now by 10 points, a gain of 0.3%. This Friday, the S&P is at 32.26. The Dow down 51, a drop there of 0.2%. NASDAQ up 37, up by 0.4. Tenured on 3/30 seconds with a yield of 0.62%. Gold up 0.7%, 18.09 the ounce. Crude, West Texas Intermediate down 0.3%. Investors looking for more frequent bond payouts may soon have the option to buy an ETF that will distribute cash every Friday. The SoFi Weekly Income ETF will trade under the ticker TGIF. I'm Charlie Pellet. That's a Bloomberg Business Flash.
TGIF indeed, Charlie Pellet. Thank you so much. Well, let's move on to one of my favorite stories from Bloomberg Business Week this week. It is online on the Bloomberg and at Bloomberg.com, written by Lucas Shaw, very timely, as he tends to be, entertainment reporter for Bloomberg, all about Netflix, and Netflix continuing to rewrite the script, as they say. He joins us from Los Angeles. Joel Weber, the editor of the magazine, joins us from Massachusetts. So, Joel, tee this up for us. Obviously, it's the perfect week to talk about Netflix.
Yeah, that's one reason, and the other is that none of us are really going to movie theaters,
right?
And desperate for some forms of entertainment. And I think what really stuck out about this project from Lucas, who's heading screen time being a new vertical at Bloomberg, doing this all the time there, and we wanted to bring that into the magazine. And I think the thing that he really kind of hit on here is like Netflix. It sort of feels like, despite the earnings being what they were, they feel like they've actually figured something out here. And that perhaps the age of the blockbuster coming to you in your living room is maybe here to stay. And there's sort of three main films that Netflix has come out with over the past few months: Spencer Confidential, Extraction, and Old Guard, all with marquee talent. They're all action films. And those are the three that Netflix is holding up as sort of examples of what they're going to be doing more of in the future. Lucas, do you buy it? Or is this model going to work and stick around?
I definitely buy that big blockbuster movies will be available first run at home, because it's never made sense to me that you had this really long lag between even when a movie like The Avengers opens in theaters and when you can get it at home, because there's just a bunch of people that maybe don't want to pay to go to the theater, maybe can't get a babysitter, or would be happy to pay extra to watch it from the comfort of their home. And Netflix is definitely satisfying that demand. I think movie theaters are not going to disappear. We're not going to wake up one day when the pandemic is over and they'll all be closed for good. The sheer variety, volume, and quality of movies that will debut at home is indisputably going up, and you can see it in what Netflix is releasing, and even in what some of its kind of fellow media companies have done in the past couple of months to adapt to the pandemic, with Trolls World Tour at home and Hamilton at home.
Well, and I think, it's so much about the pipeline and the content. Joel, we talk this, when we're dealing with anybody within, who's producing, whether it's streaming, whether it's podcast, you name it, it's all about the pipeline, right? That's ultimately, if they can, Netflix as an institution, continue to bring in actors and directors and just create content that people want to listen to, they're going to probably bring in those eyeballs.
Well, yeah, it's pipeline, but it's also been talent, right? And that has been sort of one of the more evasive things that they haven't been able to line up. And obviously, when you got Charlize Theron or Mark Wahlberg, as they've been able to do, like these are like big names, big names, right?
Right.
So the fact that they've done that is one thing, but as Lucas sort of wrestles with in the article, there's a number of other marquee names that in the director world, for instance, that like Christopher Nolan being one who remains sort of very public in saying that they will never do something streaming first. So as much as I do think that there might be a quality of like this is here to stay, it does seem like there are some other big names that will continue to probably go the traditional route still.
And so, Lucas, how does this change the economics of both sort of making and selling movies? Because the money certainly is shifting around, but how?
It's very similar to what we've seen happen in TV, where you get paid a lot more money up front, and you have a certainty. If you're an actor, you're going to get paid more money up front. If you're a writer, producer, or a financier who's got to have skin in the game, you're guaranteed usually to make a profit from day one. But your reward in success is not the same. You know, in the pre-streaming era of Hollywood, fortunes were made on TV shows that got syndicated all over the world and on big blockbusters that, made $1 billion, $2 billion. That doesn't really happen on Netflix because they try to make a big enough investment up front that you don't worry about how much profit they're going to make down the line.
And so what are the implications for who and how movies get made? I mean, does it change who makes them? I mean, that's a big question that we're all talking about too. Like, what are some of the ripple effects for the types of content that get made then?
Certainly more global. I mean, we see that in what Netflix and Amazon and others are doing because they are services trying to serve 150, 190 countries. For every big Charlize Theron or Mark Wahlberg movie on Netflix, there's a bunch of other movies, either with lesser known talent or with talent from other countries that you may not have heard about. I mean, Netflix this week, they have a new Indian matchmaking show. They are making new movies in India, Korea, Europe all the time. So I think that's one of the big changes and something that a lot of people are pretty excited about.
That international side is like a super interesting part of the Netflix business model. And Lucas, just on that model for a second, can we talk a little bit, A, about earnings, but then B, about how Netflix judges success?
Yeah. I mean, this is the second time this year where Netflix has delivered a record quarter for the company. They've added close to 26 million subscribers so far this year. They're well on pace to setting a single season or a single year record, which is pretty remarkable for a company as old as it is. But they have cautioned both that they think this is pulling forward a lot of customers who would have signed up anyways. So last time they just warned about the second half of the year. This time they gave a forecast for the third quarter, which was really disappointing to most analysts. And that means that the stock is way down. It remains to be seen if the same thing will happen this time. It happened a few months ago, which is the stock goes down for a day or two, and then it just bounces right back up. Even with the decline today, I think Netflix is one of the technical causes.
Yeah, I mean, Netflix shares, down about 6.5%, still up something like 52% so far this year, but definitely taking a hit in today's trade. Lucas, thank you so much. Our apologies to our listeners because the connection was a little bit in and out there, but nonetheless, we got kind of the meat of the story. Bloomberg News entertainment reporter Lucas Shaw on the phone from LA, along with Bloomberg Businessweek editor Jill Weber on the phone in Massachusetts. I feel like Lucas's story, though, fits very much with the naming of Ted Sarandos, right? The longtime head of its Hollywood operations to be co-CEO. I think it clearly marks what this company is going to be about going forward. It's not just about streaming everybody else's content, but they're going to be a big content producer.
No, they're hit makers in many ways. And, you think about it, and Joel did a nice job of name-checking some of the big talent, whether it's Charlize Theron or Mark Wahlberg, but you also think about the showrunners like Shonda Rhimes and Ryan Murphy and others who have signed on to huge contracts there. It's a big deal. I watch a lot of Netflix, I'll admit it. For those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Businessweek continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. We're going to talk a little economics, Carol.
We are indeed with someone who has been on Wall Street a long, long time, has seen a lot of market cycles, but why you need to watch those weekly jobless numbers over the monthly ones. This has been certainly something we've been digging into. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, July 17th. The Dow lower, S&P, NASDAQ both higher. S&P on track for its third winning week in a row. Stocks pushing mostly higher. Trading is thin. Investors digesting this week's initial burst of corporate earnings, economic data, and coronavirus news. This week, of course, we heard from the banks. Next week, a lot of tech names. S&P being led higher by gains in utilities, healthcare, and real estate, up now by 12 points. That is a gain of about 0.4%. NASDAQ is up 44, also up 0.4%. The Dow lower by 33 points, now down by about 0.1%. 10-year is down 2/32 with a yield of 0.62%. Gold up 0.8%, 18.10 the ounce, and West Texas Intermediate crude down 0.4%, 40.59 a barrel. Well, as for markets and the economy, Brian Levitt is senior investment strategist at Invesco Advisors. He was interviewed this morning on Bloomberg Television.
My point is, if you're a longer-term investor, focus more on whether things are getting better or worse rather than whether they're good or bad. Even if they're getting better modestly, slowly, markets should do well. And remember, it's going to be a very long time until we get back to full employment, a very long time until there's some pickup in inflation expectations, which means policy is likely to be accommodative well into the future.
And after last week's earnings report, we had, or last night's earnings report, I should say, we did see shares of Netflix tumble now by just about 6.7%. California is ordering remote classes for most public schools. It's a headline on the Bloomberg Professional Service right now, but important for California. California has ordered remote classes for most public schools. Uber pledging to double black leadership by 2025, becoming the latest tech company to answer national calls for racial and economic justice with measurable goals. Uber shares, they're down now by about 0.1%. Crosstown rival, based in San Francisco, Lyft up by 0.5%. Recapping, S&P up 9, up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's talk a little Business Week economics now, if we can, and we can. It's our show. We're going to do what we want. All right, Carol Masser, Jason Kelly here with you on a Friday afternoon, just asserting our authority, Carol. You know, do what we can. Delighted to have back with us Milton Ezerati, Chief Economist for Vested, joining us on the phone from Pennsylvania. Milton, how are you? How have you been since we last talked?
Hot and humid here. I've been fine, thanks. Watching the news carefully. Disappointed that it's not getting better faster, but hardly surprised.
Yeah. Why not surprised?
Well, we had this initial flurry, but even then the claims for unemployment insurance continued to remain remarkably high compared with their historic norms, and it's going to take a long time to get out of this hole that we created with the antivirus lockdowns and quarantines. And the numbers we got this morning on initial jobless claims still very high, 1.3 million, I believe the number was, yes, and that doesn't put a lie to the very good jobs numbers we got earlier this month, but it does raise a level of skepticism about how fast things are improving.
Well, listen, all the big bank CEOs seem to confirm that. Jamie Dimon saying you're going to have a much murkier economic environment going forward than you had in May and June. David Solomon of Goldman saying, I think you're going to see a flattening in that economic pickup, and that will slow the progress that we made, the uncertainty persisting. What does that mean? Play it out for us. Play the movie that will be our economic life in the next couple of months.
The movie, it's going to be a slow-moving movie. There will be no great chases. There'll be no explosions. We had a great, at least it looked like great numbers earlier this month and the month before on the jobs report that the Labor Department puts out at the beginning of each month. The unemployment numbers, the initial claims for unemployment numbers temper that. It's going to be a slow climb back. It's nice to be an august company, but maybe that'll make me rethink things. But no, I'm only joking. That's the opinion I have.
So, Milton, I mean, I do wonder from an economic perspective, how do you see this balance that we're trying to strike between reopening and public safety We just got a headline about California saying that most of their schools essentially are going to be remote learning again. Schools have really come to the fore as such a crux of this argument, in part because if kids aren't in school, we don't have a big majority, or a big portion of the population, I should say, that's really truly able to get back to the office and maybe even get back to work in any meaningful way. What's the lens you look at that through? How do you look at that balance?
Well, I think we're going to be struggling with this balance at least up until the election and through the election. Everything will wait on a vaccine or some kind of tremendous improvement in new cases. And with the opening, whether it's in Louisiana or Texas or California, even as it's going slowly, it is still the rate of the number of cases is rising, and that puts the fear of the virus into the politicians. So I can't blame them. They're walking a tightrope. But we're going to be doing this kind of thing well into the new year.
So, okay.
And that means the jobs don't come back that fast.
Well, that's what I want to know. Like, so what's the scenario, just briefly, the scenario we don't get any more aid. So what's the economic recovery look like? We get more aid and continue to get support. What does that recovery look like?
Well, that recovery, effectively, we don't have people at work. We have people being supported by various mechanisms to keep consumption up and to keep employers from making permanent downsizing. So to that extent, I think it's worthwhile for the longer term, because we don't want them to say, well, we're just going to downsize, because that means the jobs go away forever. But it's going to be tough coming back. Most of these people, or I shouldn't say most, a lot of these people are in service areas. They're in leisure and hospitality,
right.
And people are not going to travel like that. And these are chambermaids and waiters and cooks and whoever, and they're not getting their jobs back, and not for a while, at least not in the numbers that would bring us anywhere near where we were this time last year.
So aid or no aid, you're saying? It's just because those industries are just not happening. We know, was it UAL, right, has talked about cutting thousands of workers.
And they have. And what we want to do is support industry, support business, support these people, the consumer, enough so that we get less of that than we might otherwise get. So I'm not saying the assistance isn't worthwhile. In fact, I think it is. But it can only do so much.
And so, as you model this out, and it sounds like, from what you just described in answer to Carol's questions, it's sort of bleak on an unemployment picture for the foreseeable future. What does that look like from a numbers perspective in terms of either unemployment rate or continuing jobless claims, even if we think about the rest of the summer?
Or growth, right, yeah.
Yeah, well, the growth will be there to some extent. I don't think we're going to see negative numbers in the third and fourth quarters or the first quarter of the year for the GDP. But in terms of the jobs numbers, we're going to see unemployment rates above 10% for quite a while. And we're going to see these initial claims for unemployment probably near 1 million a week for the foreseeable future. Now, the thing is to look at if they're coming down. It's the same thing with the virus. You know, if the new cases level off and begin to come down, the reopening can occur a little more quickly. We get a little faster improvement, but it's only a little faster because people are not going to go and throw all the stops out. So we're going to see these numbers, these ugly numbers, near 1 million, over 1 million, slightly under 1 million for the foreseeable future, certainly through the summer and up until the fall.
Right, numbers we couldn't
Vaccine
even...
would change everything.
Right, and numbers we couldn't even imagine if you go back to January and February of this year. Milton, thank you.
If you go back, if you go back for 40 years, you couldn't imagine.
Yeah.
No, it's a really good point. It's a really good point. Milton, thank you so much. Really appreciate it. Have a good and safe weekend. Milton Ezrati is chief economist at Vested, joining us on the phone from Glen Mills, Pennsylvania. He's also the author of 30 Tomorrows, the Next 3 Decades of Globalization, Demographics, and How We Will Live. And I feel like a lot of that is changing, Jason.
Totally. Yeah. And I think when you start to think about the numbers and the scope of them, we've been numb to them a little bit, not in a good way. We need to keep thinking about that because, the million give or take, 10% plus unemployment, it's bleak.
Those numbers are people. Let's not forget that. Right. All right, let's get back to world and national news headlines. Back on over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. Congress is beginning to debate another round of coronavirus stimulus funds, and today Treasury Secretary Steven Mnuchin told House lawmakers the administration supports more money for small businesses.
The administration supports using the existing money and topping it up with some additional money, and that will be discussed, and allowing for a second payment to the businesses that are especially hard hit.
Mnuchin suggests that the government forgive all small loans under the Paycheck Protection Program, but with some sort of fraud protection. President Trump appears to be losing his credibility when it comes to his handling of the pandemic. Bloomberg's Amy Morris reports.
A Washington Post ABC News poll finds 38% of Americans approve of how the president has managed the outbreak. That's a drop from 46% in May. And 60% do not approve. That's a jump from 53% in May. More than 6 in 10 say they just don't trust what the president says about the outbreak. The president has sent mixed messages throughout the pandemic and is often at odds with scientists and health officials within his own administration. In Washington, I'm Amy Morris, Bloomberg Radio.
Questions are being raised about federal officials driving around Portland, Oregon in unmarked cars and grabbing protesters and carting them away. Legal scholars are questioning whether the moves passed constitutional muster. Federal officials from U.S. Marshal Service and Homeland Security have stormed Portland's streets as part of President Trump's promised strong response to ongoing protests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, a name that we've been following for years. We've spoken with the CEO, James Park, a number of times on this program. Carol, talking about Fitbit.
Yeah.
It's moving a bit to the downside today. Bought by Google, but that deal still has to be approved by regulators.
Right. It's not closed. It's not a done deal, but it is seeing some pressure today. It was down nearly, roughly about 4%, 3.8% to be exact, now down about 2%, but it's the most that we've seen in a couple of weeks. And you're right. MLEX reporting that competitors complained about Google's remedy proposal to European Union antitrust regulators. So other makers of wearable devices and digital health services were giving market feedback on Google's promise for 5 years to refrain from using Fitbit's tracker data to target advertisers. Competitors telling the EC that the remedy didn't respond to the worries they had about the combination. Listen, Google is all about data.
Listen, people.
Listen, people. But Google is all about data, right? Yeah. And I think there is concerns about having access and their might, if you will, to be able to use and leverage that data. And what does it do for competitors in that space?
Right, and I think that's really
what it comes down to.
That's what it comes down to. I mean, there are privacy concerns, of course. The European Union. I mean, look, I think it's fair to say the European Union overall has been a little more fierce when it comes to
way ahead of us.
Competitive practices. You know,
and
Marguerite Vestager has been a pretty vocal voice, a very strong voice amid all of this. So watch that space for sure. I mean, if that deal falls through, obviously very bad news for Fitbit, or if it gets delayed, or if it gets somehow altered.
Yeah, no, exactly, right? You do wonder because Fitbit has been struggling, safe to say. And I think when we all saw the Google purchase, we thought, wow, that's a really long, big lifeline in terms of its future. So something we're watching. And as we said, we definitely are seeing the stock under some pressure in today's session. You're listening to Bloomberg Business Week. Carol Master, Jason Kelly. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It is a mixed day on Wall Street. We have got the Dow lower, S&P, NASDAQ both higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks choppy today in a mixed session. Dow's currently down 73 points. S&Ps are higher by 10, and NASDAQ gains 33. The U.S. 10-year yield at 0.63%. Gold is up 14. WTI crude futures are a little changed, and transports rise 105 points. Leaders to the upside in the Dow, Cisco, Pfizer, and Intel, while ExxonMobil and Boeing led to the downside. After earnings, Netflix fell as much as 8.2%, BlackRock rose 4%, and State Street fell 3%. In other news, the New Jersey virus transmission rate rose to its highest level in weeks, and the Trump administration weighs a troop cut in South Korea. Wrapping things up, Rosetta Stone is said to weigh a sale of part or all of its businesses. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
And we thank you, Bill, to hear live breaking news over your Bloomberg-type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar here with you on a Friday. Joining us again on the phone from Raleigh, North Carolina, Ryan Kelly, Portfolio Manager for Hennessy Funds. Looking after the Hennessy Gas Utility Fund Energy, it has been, safe to say, a tough place to be here in 2020. That's not a news story, but we want to get the latest from Ryan. Ryan, first of all, let me ask you about North Carolina. We ask this of everyone who joins us from outside our little tri-state area bubble. What's it like in North Carolina right now?
Well, just like your last guest, it's hot and humid. Probably a little hotter and humid than New Jersey. But right now, I'm working from home. Many people are still working from home, and we're just trying to keep the cases down as a group. So we'll see how that goes.
How does it impact your outlook, Ryan, in terms of what's happening? I mean, you guys are unfortunately, in the situation or getting closer to situations that we certainly here in the New York Metro were dealing with a few months ago. So I do wonder, though, and it definitely, you can't be in it without it having an impact on how your outlook is, how we get back to normal, what kind of recovery we get. So I do wonder how it's impacting your view here.
Well, as far as view of the market, it kind of explains a lot. There seems to be, I would say, misinformation out there. There seems to be a lot of differences between how people are handling this. Some more conservative, some less so. And that's kind of the way that I see the market right now as well. We've had, as you know, growth stocks completely outperforming value stocks. We've had different parts of the market with really a displacement of asset allocation in various different sectors. And utilities, which is one of the sectors that I primarily focus on, utilities have lagged significantly this year versus the rest of the market. And it's interesting that that's happening. And I would say, I've visited with you guys. I've been on your show many times for many years. I've never come on and had it been such a large discrepancy in valuation for utilities. Utilities have never been so cheap on a relative basis versus the rest of the market. And what we've had here so far this year is the S&P earnings for this year have dropped almost 30% when you look at the estimates versus where they were at the beginning of this year. Utilities have only dropped about 2%. So what that means is that even though utilities have underperformed this year on a relative basis, we're trading at about a 10% discount to next year's earnings and a 30% discount to this year's earnings versus the rest of the market. And normally, utilities trade at about a 5 or 10% premium to the market.
Right.
So there's a huge opportunity here right now, I think, when it comes to valuation.
And yet, Ryan, as you know, as somebody who's managing a gas utility fund, and it's not been an easy environment, and your fund is having a tough time here, investors aren't interested. So it doesn't even matter. Like I understand the logic here, but investors aren't interested. So what do you do? And I'm just curious, you know, what kind of flows are you seeing? Are you losing money from the fund because people are just saying, you know what, I just don't want to touch this area of the market?
Well, there certainly has been outflows. This is a the Hennessy Gas Utility Fund focuses almost exclusively on utilities with a much heavier concentration on natural gas utilities. It follows an index actually created by the American Gas Association.
Right.
So it is very specific, and investor interest certainly has waned. I would, given the valuations that we're seeing, given the fact that these companies, 44 out of 48 of them pay a nice dividend. They're growing their dividends at 5 to 10% per year over the last 5 years. Dividend yield right now for these companies are over 4%. That's versus the 10-year at 60 basis points and the S&P at less than 2% dividend yield. So a lot of ways these look attractive on a relative basis. And, I'm not saying anybody should go whole hog into utilities only. I mean, there's many other places in the market to invest. But in an asset allocation model, this is the time to look at something like utilities, which are underperforming, which are at lower valuations, which have real good, strong predictability of earnings over the long term.
And so, any light at the end of the tunnel here, Ryan? Only got about a minute left.
I think the light at the end of the tunnel comes when, we get another couple quarters behind us, when people start to look at, how nice and predictable these earnings can be. We've heard in the first quarter that from these utilities that they're still projecting they can still project 5 years out and still see the same kind of 6 to 8% growth in earnings that they've had over the last 5 years or so.
Right.
And I think it just takes time for people to become more comfortable with that and to realize the benefits of continuing to invest in utilities.
Yeah, I would say it's definitely going to be some patience, and I think some of it, too, is going to be contingent on what kind of economic recovery we have and demand, certainly. So it's going to be something we'll keep an eye on. Ryan Kelly, thank you so much. Portfolio manager at Hennessy Funds. Jason, by the way, energy, worst performing major industry group in the S&P 500 in the past 12 months and is still this year. We know, we've talked about it. What's been going on in the energy market overall.
And it is interesting to hear him talk about, Ryan Kelly, that is just, this seeming disconnect in terms and really almost like ahistorical performance in many ways in terms of the performance when it goes against everything that because it's not like utilities is this like newfangled thing that people are investing.
No.
You know what I mean? Like
Yeah,
it's
I
weird
know.
to see this sort of disconnect.
All right, you're listening to Bloomberg Business Week, and this is Bloomberg.
Was I too far gone? Too far gone? Too far
It's Neil Young, right?
I think it's Neil Young.
Isn't it?
Yeah, there you go. Good.
What you got for us, Dave?
Well, Too Far Gone. That's the song from the Freedom album.
Thank you.
We can start there. In case Jason feels like doing another deep dive into
We may,
the
Dave, we may lose him any moment.
Yeah,
You know what
actually,
happens
that's
here.
a good idea. That's a good idea. No, keep going, Dave.
All right. Anyhow, this is all about whether U.S. technology stocks are too far gone in terms of their performance relative to the shares of similar companies in emerging markets. And bear in mind there, you're talking about South Korea with Samsung Electronics, Taiwan with TSMC, the chip maker, and, a whole lot of other companies like that. And it's a point that Michael Schau raised in his latest weekly note. He's the CEO over at Market Field Asset Management. And what he did was track the ratio between the S&P 500 and MSCI Emerging Markets Information Technology Indexes. And when you run the numbers on the Bloomberg terminal, you find out that from a low in February 2018, so roughly 2.5 years ago, the ratio is up 64%. And at its peak, it was at the highest level since November 2001. Now, the chart will show you we haven't gotten to the extremes yet that you saw in 1999 and 2000 when, you had the internet-driven bull market in U.S. stocks reaching its high. Nonetheless, you do have a general show of strength that, it kind of bothers Shao. It figures, that they're really, the emerging market companies ought to be doing better. And in fact, if you look at the last few weeks, so the last line on the chart, the ratio has been coming down. The high was reached back in May. And as he sees it, it's a good thing that these emerging market tech shares are starting to close the gap. And that's why the chart headline says bridging the gap. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So emerging market tech are gaining, and that's why the gap is being reduced?
Well, yeah. I mean, the point is that, at least in the last couple of months, you've had a bit of a reversal. But if you look over the last 2.5 years more broadly, I mean, U.S. tech has dominated to the point where it's been getting excessive, at least in Shao's view.
All right. Good stuff. Dave Wilson. Really
So
appreciate
Dave Wilson, I have to say, On Every Street, great album. I did, I went to my Apple Music, downloaded. I was listening to it this morning while I was catching up on email. It's a really solid album. It's too bad Dire Straits stopped making studio albums after that.
Well, that's how it goes. I mean, and Mark Knopfler's certainly been active since the years. Movie soundtracks. He made an album with Emmylou Harris, et cetera, et cetera. So he's still out there doing it.
I mean, one of the great guitarists of in history, right? Safe to say? Yeah.
Yeah, you could say that.
All right, good. I like when you validate my theories, Dave. All right. Dave Wilson, have a great weekend. No, we're going to talk to you again. You can still have a great weekend.
When the time comes.
Yes,
absolutely.
exactly.
But thanks, everybody, for another edition of Bloomberg Vinyl right here on Bloomberg Radio.
Oh, my God. I would host Bloomberg Vinyl with Dave Wilson
I know.
every day of the week. That's amazing.
You do Bloomberg Vinyl, I'll do Bloomberg Liquid Assets. How's that?
Liquid assets. There you go.
Hey,
Wow, you've
it's a
already
show.
named it.
I've been, planning.
been
Hey,
using
listen,
it.
there's a story I just saw. I don't know if you saw this by our team in D.C. Federal government should weigh forgiving all small loans provided under the Paycheck Protection Program during the virus pandemic. This is coming from U.S. Treasury Secretary Steve Mnuchin.
Yeah, interesting. All right, let's take a quick look at how the markets are doing. They really still can't quite make up their minds, although the S&P more in the green than it has been, only about 0.4, a little more of 1%. NASDAQ very similarly. The Dow still down, just a touch down, about 0.1%. It's a light trade, as we've discussed, Carol. And, it was interesting to hear Vince Signorella say at the top of the show, this is a market that's actually waiting for next week in some ways.
Well, we kicked off earnings, the big banks weighing in, but now we want to see from other companies how they're doing, what CEOs have to say about the current environment, the outlook. Are we starting to get some visibility? I mean, listen, this is what we need to weigh on and to weigh in, and trade on. And I think it will help determine whether or not we get some more relief. Get a little tickle.
You need it. You need some relief. Maybe a glass of water there from your made-for bottle. Keep moving those beads. Yeah, I mean, we definitely do need to hear from companies and CEOs about the outlook. And as we've talked about with Gina Martin Adams and others, we also need CEOs to say, look, this is what the rest of the year we think is now going to look like. These are the decisions that we're making, whether it's about CapEx, whether it's about hiring, whatever it's about.
In the meantime, the S&P 500 is on track for about a 1.4% gain this week. That would be the third consecutive weekly gain. So, again, we kicked off our show saying, bipolar world. Larry Fink at BlackRock really concerned about the differences between really large businesses who've gotten assistance from the Fed with really cheap money and other federal relief programs, and small business that in many ways have been not able to tap as many avenues when it comes to cash and assistance and helping to shore up their business. And you know what? We talk constantly about, small business. It's the backbone of the U.S. economy, employs so many different workers. But even as these big businesses, if they've got to cut back, they're going to impact some of those smaller businesses along their supply chain.
All right, for a little more context on this market, let's get a quick business flash with Charlie Pellet. Hey, Charlie.
Well, hello there, Jason Kelly. 28 minutes to go ahead of the close. Stocks pushing mostly higher, thin trading. That's your takeaway. S&P up 15 right now, on track for a winning week. Looks like 3 in a row, up now by about 0.5%. We've got NASDAQ up 45, higher now by 0.4%. I do like to mention the year-to-date number on NASDAQ, up now by 17.3%. NASDAQ 100 index by comparison, up by 22%. The Dow trading lower now, down 23 points, down by 0.1%. 10-year yield 0.62%. Gold up 0.8%, 18.10 the ounce. And on this Friday, crude down 0.3%, holding above 40 at 46.1 a barrel. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser. We are awaiting a conversation between Kevin Cirilli and Stacey Abrams down in Georgia. In the meantime, going to be a hot one. A hot weekend.
We already
I hope you
talked
get out
about-
on your boat.
No, we actually won't because because
Too hot?
it can be just too hot, and if you have no wind, what's the point?
Right. On a sailboat.
Yeah, but I mean, no, there's been
Reminds me
times
of Tommy
where...
Boy. Need a little wind here.
No, but seriously, it's supposed to be miserable
Yeah.
this summer. They're talking about temperatures 93 degrees Saturday in New York, and by Monday it will feel closer to 100 degrees. We're going to have a lot of humidity. What's interesting is, and I've been thinking about this, the weather that we've seen, the weather pattern this summer, especially as you have restaurants in the New York Metro opening up, but it's outside space, how tough this has made it for them, because we've had a lot of rain, it feels like, and a lot of rainstorms.
Yeah, exactly. So it's going to be a hot one, so stay cool. I don't know how pleasant outdoor dining, to your point, is going to be, but, maybe after the sun goes down, have a nice cocktail, socially distance, wear a mask, all that good stuff. You are listening to Bloomberg Business Week. Coming up later on, we're going to go deeper into the world of diversity and inclusion. Think about venture capital, even think about the sport of running, and, a lot to get to, and we got to close the market. It's the end of the week.
Yeah, we alone have to close the
We do.
market. You're listening to Bloomberg Business Week. We are going to count you down to the closing bell, and as I said, we're on track for another weekly consecutive gain here. So good to know. Did you just say that? What's
No.
the matter? Why are you laughing?
No. I'm just thinking about all the things we still get to do today. I'm very excited.
Well, we have some really great voices. Lo Tony is somebody I'm really looking forward to.
Me too.
I was reading about him, came across some articles, and our team, asked him to come on. He was a partner at Comcast Ventures, then at GV, which was formerly Google Ventures. Alphabet was the anchor investment in his investment firm, Plexo Capital. He's the founding managing partner of that firm. He's going to talk to us about the venture capital world, someone who's been in that world for a long time. He's got some ideas about how to bring VC into the 21st century. And I feel like against this backdrop of diversity and inclusion, he's one of the smart voices that we need to reach out to.
And we also know that venture capital ultimately drives a lot of the decision-making for entrepreneurs. After all, they are funding entrepreneurial ventures. So Michael Moe, he's going to be with us in the 5 o'clock hour Wall Street time, friend of the show.
Yeah.
I've known him for a number of years. I believe you have as well.
Great voice.
Successful investor there in Silicon Valley as well. He is starting this very cool entrepreneurs boot camp. It's starting next week. 7 weeks they're doing it. They're putting it out there for free.
cost.
Exactly, no cost. I call that free. And
Sorry, I was thinking at the same time. So
It's just-
forgive me.
Exactly. But it's interesting too. He was telling me he's a pal. We were texting a little bit, and he was telling me Ronnie Lott, of course, well-known San Francisco 49er. He's involved in this. Ronnie Lott has gone on to a very successful career in business. One of those athletes who sort of transcended what he did on the playing field. So really manifesting a lot of what we've been talking about, especially when it comes to Silicon Valley. Silicon Valley's, they've got a problem that they need to fix.
All right, let's get to Kevin Cirilli sitting down with Stacey Abrams. Let's listen in.
I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and for Bloomberg Radio, and I want to welcome both our radio and television audiences, as well as Stacey Abrams. She, of course, is the founder of Fair Fight and the 2018 Democratic nominee for governor. Leader Abrams, we are thrilled to have you with us, but first let's get to pressing matters because Governor Brian Kemp, a Republican, on Thursday filing a lawsuit against the Atlanta City Mayor Keisha Lance Bottoms, a Democrat, regarding the face mask mandate. How is this going to impact the potential spread of the coronavirus in the state of Georgia?
It's going to exacerbate that spread. We know that Georgia already is among the 18 states facing the hardest resurgence. We know that more than 130,000 Georgians have contracted the disease. As of today, 3,000 have died. We know there's a disproportionate effect on communities of color. And we know that this mask mandate or the refusal to allow one will simply go against both CDC guidelines and the unpublished the unpublished recommendations of the White House, which says that mandating masks make us safer and help stop the disease from spreading.
All right, and now let's get to something that you are very much working on, and that is the issue of access to voting in the November 3rd election. How can we assure Americans that mail-in votes will be counted on November 3rd?
First, we have to guarantee that they have the right to vote by mail. We have 34 states that allow vote by mail with no excuses, meaning anyone can do it, but we have 16 states that put restrictions on it, and unfortunately, we have a president who is doing his level best to undermine the integrity of the process. He, in a very erratic way, said that he doesn't believe in mail-in balloting, but he believes in absentee ballots, which are the exact same thing. He has spread this lie about voter fraud being exacerbated by mail-in balloting, which is wholly untrue. The states that have used this have been able to demonstrate time and again this is not a problem. But we also have inaction by the U.S. Senate until they approve the HEROES Act, which will give $3.6 billion to cash-strapped states to allow them to expand vote by mail and scale it up to what we know is going to be necessary in the midst of COVID-19, as proven by primary usage. Then we will not be able to guarantee that people get that right to vote, let alone that those votes can be counted.
Leader Abrams, when I interview Republicans and Democrats on Capitol Hill, it feels like that act that you alluded to is going to be falling upon partisan lines. So what does the government need to do in spite of that in order to make sure that the ballots are counted? And what institutional, structural changes need to be made immediately, really, ahead of November 3rd?
Well, the structural requirements are three. One, we have to have expanded access to mail-in ballots. Number two, we have to have expanded access to early voting in the states that do not permit it. And number three, we have to have preservation of in-person voting on Election Day without a reduction in polling places. The HEROES Act will accomplish all three of those things by giving the states the resources they need. And the reality, this isn't a partisan issue. We have Republican secretaries of state like Michael Adams in Kentucky, who has said that vote by mail is the safest way to vote. We've got Democrats who've been calling out the same. And we know that states across this country are being forced to slash their budgets because of the COVID pandemic. And that the reason we have a United States of America, the reason we have a federal system is that it's the responsibility of the federal government to step in moments of crisis like a pandemic and support the states in executing the constitutionally required November election. These are things that can be done, but we have to put aside partisanship to make sure it happens.
Should every American get a mail-in ballot in the mail without having to request one?
Every American who is eligible to vote should receive a ballot that is postage paid. That is absolutely the right thing to do. That would be the gold standard. But I live in reality. And so what I'm asking for is that we remove as many of the barriers as possible, that we put guardrails in place to ensure that everyone who wants to vote by mail can do so. However, we have to remember that not everyone can or should vote by mail. If you are disabled, if you have a language barrier, if you have legitimate, if you are homeless, if you've been displaced by COVID, there are a number of communities that simply don't have the right or the capacity to vote by mail, and they need to be able to go in person. And that's why we can't simply focus on vote by mail. We have to be able to walk and chew gum at the same time, do vote by mail, in-person early voting, and election day voting without a closure of precincts.
I hear you on this, Leader Abrams, but I got to press you here because we're just, a couple of months away from the election. And, I'm curious whether or not the bureaucracy in the federal government, at the U.S. Postal Service, for example, whether or not they are actually prepared to handle the influx number of ballots that could be coming their way. How do we guarantee that the institutions that are really going to be on the front lines of counting the votes for democracy are adequately prepared for the potential of a massive increase in mail-in votes?
We start now. We make certain that our Congress acts now. The House has taken action. If the Senate passes the HEROES Act, it includes the guardrails we need, includes the resources we need to make certain that the U.S. Postal Service isn't weaponized by Donald Trump to block access to the right to vote. It ensures that states and local governments have the resources they need to scale up absentee balloting. It ensures that we have the poll workers we need to do this process. But we also have to tell people it's going to take longer than 11 p.m. on election night to know the answer. When in the midst of crisis, we have to adapt. And that adaptation is not only possible, it is necessary. We also know that every single state in the country has the capacity and the infrastructure for mail-in voting. This is about scale, not about capacity. And if we get the resources to scale this up, as Vice President Biden has called for, as Republicans and Democrats have called for, if we do what Tom Ridge, a Republican, has called for, and what good Democrats and Republicans are calling for across the country, we can make this work. But we have to have a president who actually believes in our democracy and leans away from his cowardice and his ignorance and actually works for Americans for once.
You said something right there about the expectation of not necessarily getting the vote on 11 p.m. on election night. How might this change the way that Americans get their election results, practically speaking?
Well, practically speaking, we have to pay attention to the fact that in Wisconsin, in Georgia, in New York, it's going to take a minute. But if we have done the work on the front end, if we have stopped this partisan undermining of the process, if we have recognized the legitimacy of voter suppression and done our work to push it aside, if we have invested in the infrastructure we need, then people will have the patience. We know that South Korea held their single largest election in April in the midst of COVID-19. So there is no excuse for us not being able to do this work. What has to happen is that our will has to meet our obligations. And that is that we have to have the resources from the federal government, the commitment of state leaders, including secretaries of state that unfortunately have practiced voter suppression in the past. But together we can make this happen. And we have to have the patience of the American people to know that once they've cast their ballots, if we've done our part, we will get an answer.
Leader Abrams, in your book, Our Time Is Now, you write about how you are the daughter of two civil rights activists, and actually your father was arrested at the age of 14 for helping to register African Americans to vote in Mississippi. Here we are in 2020, where the nation has been having for a national discourse around race relations in this country. Do you think that the momentum of this moment might be able to yield some results as it relates to upending voter suppression?
I do believe so, but this is going to be a process. There's not a moment where we have not had voter suppression in our country. And so my mission right now is progress. How do we mitigate voter suppression so that more and more of the people who deserve to be heard are able to make their voices heard at the ballot box? How do we make certain that we understand that voter fraud is a lie, that it is rare and it is almost I don't believe has ever really affected an election, which is different than election fraud, but that voter suppression is real and that its intent is to defeat us, to convince us it's not worth trying, but that if we understand that it exists, if we fight back against it, then we have the ability to shape the future, especially dismantling structural racism for the first time in our country. It's going to take time. It's going to be more than just a single vote, but this vote in 2020 is an important start.
Leader Abrams, as you have campaigned on this issue as well as for progressives across this country, you are often seen as a potential vice presidential pick for presumptive Democratic presidential nominee Joe Biden. How has that conversation impacted your advocacy work, and what type of vice presidential pick do you hope the Biden team selects?
I've been doing this work since I was a college student. I've been working on voting rights because my parents raised me to understand that the power of a citizen begins with the power to vote. And that is why in the wake of the 2018 election, I founded Fair Fight. It's why I'm also focused on the 2020 census, which is just as important in setting the future of our right to vote because it determines our political districts. And that's why I created Fair Count. I have been working on this and I will continue to do this work because I'm driven by the mission of making sure that we have the policies that right our country and that make us all eligible for opportunity. And I look forward to watching Vice President Biden select the person he wants as his running mate. There's no one who knows better what he needs because he's done this job. And I believe that no matter who he picks, I'm going to be shoulder to shoulder with them, making certain that Vice President Biden becomes the president of the United States and that we start to right our democracy and restore America.
Okay. Stacey Abrams, Fair Fight founder and, of course, the 2018 Democratic nominee for governor of Georgia. Thank you, Leader Abrams, for joining me.
All right, and that is Kevin Cirilli, as you just heard, speaking with Stacey Abrams, getting in a question there right at the end. She is, by all accounts, on the short list there, Carol, and we expect within a few weeks that Vice President Biden, former Vice President Biden, will select his running mate.
A lot of names being floated, so we will know more, as you said, Jason, in a few weeks. What we know right now when it comes to the virus in New York City, apparently, according to Governor Cuomo, New York City can start the fourth and final phase of reopening on Monday. We're talking about phase 4. That means sports can take place without fans, zoos, botanical gardens, and outdoor movie production can resume, but indoor dining, museums, and malls will remain closed. Mayor Bill de Blasio saying earlier today that he and the governor are in agreement on cautiously opening the parts of our economy that we can do safely. So there you go, moving ahead, big moves ahead if you think about where we were just a few months ago, Jason.
Absolutely, and certainly in contrast to a lot of the rest of the country, but Governor Cuomo and Mayor de Blasio is certainly wary of that. Let's get a check on the business day and the trade as we look to wrap it up in the next 13 minutes. Charlie Pellet, what's up?
What's up is the S&P is up, Jason Kelly, up now by 13 points, up by 0.4%. NASDAQ also up by 38. That is a gain of 0.4%. The Dow, however, been trading lower most of the day. The Dow Jones Industrial Average down now by 41 points. That's a drop of about 0.2%. On the S&P, we're seeing gains in utilities, healthcare, and real estate. The 10-year yield, 0.62%. Gold up 0.8%, 18.10 the ounce. And crude, a pullback there, down 0.3%, 40.63 a barrel. So the S&P on track for its third winning week in a row, up right now by 12 points with 12 minutes to go, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It is time for the drive to the close. Dave Mazza back with us, Managing Director, Head of Product for Direction, but it's got an X, so that makes it cool. Right, Dave? You're joining us from Vermont. Really nice to have you with us to wrap up the week. How are you?
I'm doing well. Thanks for having me back.
Absolutely. It's great to have you back. So, as we wrap up this week, I mean, it's been a vaccine-driven trade. It's been an earnings-driven trade. What do you make of the market right here, mid-July 2020, not a mid-July any of us anticipated? How do you read the market?
The way we're looking about the markets going forward is that much of the news has begun to be priced in. And by what I mean by that is really the stimulus news. So we all know the economy has certainly rebounded sharply in many areas, but we're already beginning to see, using some real-time data, that because of the choppy reopening and I call it reclosing process, if you will, is that real-time data has struggled in certain states. Yeah. But again, markets are focused on the future. They're in fact writing off much of 2020 earnings and looking ahead to 2021. And when you have that much unprecedented trillions and trillions of dollars of stimulus and maybe more coming, investor sentiment has, effectively continued to be really robust.
Okay, so with that in mind, what's the investment strategy? I mean, you create a lot of products. They're all index-based, right? Yeah. So I'm just curious, where has money been flowing? What's turning out to be the better investment ideas or the better indexing ideas in this environment?
So it's interesting. We have products more geared toward traders. These are a leverage and inverse ETFs. So you tend to see kind of shorter-term trades being expressed there. And what we have seen there is significant amount of money moving into areas like home builders. We know they've had great performance, and traders have followed. Another area that's begun to pick up there is things like aerospace and defense. And really there, people are playing the Boeing trade because in that particular index, Boeing has a large weighting. So, we know whether or not it's the Robin Hoodies or what have you, people have been looking at beaten down areas. But what's gotten me a bit discouraged is that even this week, it's become a bifurcated market. And by that, I mean every day it's either the stay-at-home trade winning or the reopening trade winning. And what we're really advocating, again, for investors with a medium-term horizon or longer-term horizon, we're just saying, what are the lasting changes of this pandemic? It's not going to be whether Carnival Cruises can begin cruising again on October 1st, what have you. It's what changes have been accelerated or could be coming. For us, one of those is the trend toward remote working. Whether or not offices reopen, we think many companies are going to be particularly cautious, have more of a hybrid model going forward. And then also things like online education and telemedicine. These are lasting accelerants that the pandemic has really caused, meaning those trends were already in place, but the pandemic just made more and more people realize that there could be greater convenience or productivity had by thinking about work, thinking about connectivity in different ways.
So, Dave, first of all, I love that framing stay-at-home trade versus the recovery trade. I feel like that is something that's dominating just about every conversation. What's interesting is we just heard an interview that our colleague Kevin Cirilli did with Stacey Abrams, who is in the mix, we're told, for the vice presidential sweepstakes, as it were. In a normal year, in a normal 2020, we would be talking obsessively about the presidential election, and we'd be talking about how investors are looking at it, whether it's the incumbent winning or the out of favor party or out of power party coming in. How much are you starting to think about that? Are you starting to figure that in when you look at the market? And if not, when?
Well, I actually think you raise a great point, and it's somewhat of a myth that I think we're seeing just because we are in such a headline-driven world. We're in a Twitter-driven world, real-time information, but and there's a health crisis that's still raging across the globe and for a better part of the United States. But one of the risks that we see, and we put this in our 2020 outlook, is the risk of a blue wave, and that doesn't mean an imminent market sell-off. It just means that a lot of the regulatory policies and changes that have been in place under the current administration could change markedly. I think most people are still assuming that we'll have mixed government, and historically, research has shown mixed governments are great, regardless of whether or not a Democrat in the president or a Republican. Mixed governments can cause not a lot of change to happen in a short period of time. However, a Biden sweep with the Senate would cause a significant amount of change. You could argue for the better or worse. That's really not the point of investing. It's just thinking, are we pricing in the fact that there could be significant environmental changes? We already know he's laid out a tax policy.
Right.
And that would have a major impact on market multiples, which have been the only thing driving the market higher this year. Earnings have been abysmal. We know, many companies are beating earnings, as they usually do. But if it's all been a multiple-led expansion, and if you have a significant downgrade in EPS because of a higher tax rate, it's going to be difficult for investors to continue to assign such a higher multiple. So, yeah, we're looking out to October, looking out to November. If you look at the data, the VIX futures curve has a really funny spike right around the election. So some traders are beginning to position for that. I think as we get closer, more and more will.
But I think also the devil's in the details. I mean, I can't imagine an administration, even if it was largely blue, imposing taxes if an economy is struggling, right? That's maybe not the right thing to do. I think, you really have to see what the details are ultimately, in terms of policy. And, we've seen a lot of momentum coming from Wall Street already about, investment folks thinking about potentially a Biden White House and what that would mean for Wall Street. So, I guess time will tell. But as you said, it's a big story, and it is certainly something to keep in the back of our minds.
All right, Dave Mazza, thank you so much. Really good to spend some time with you, Managing Director and Head of Product at Direction, joining us on the phone from Vermont. So we are going to wrap up the trading week in about 4.5 minutes, a little less than 4.5 minutes, 4 minutes, Carol.
Yeah.
It's been an interesting one, to say the least. Earnings-driven, vaccine-driven, as I said at the top of our conversation with Dave. So interested to get the numbers. And I always look forward to the Carol Masser breakdown of the week when you sort of put it all in perspective.
Well, I like to see how much we've come off the lows. I'd like to see what we've done for the year. I mean, it's been such an unusual year and a year of extremes when it comes to market moves. But I like that perspective of kind of where we are.
Were you calling yourself a nerd or me a nerd?
I'm a nerd, and I'm proud of it.
Yeah,
I
me too.
mean, it's what I love about Bloomberg, all the numbers and the ability to crunch and really kind of have a fuller picture.
Even on your little laptop there, you're just making it work.
All right, folks, as Jason said, we've just got about 3.5 minutes left in today's trading session. We're going to finish with a bit of a mixed close here. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another winning week for the S&P 500 Index. 3 in a row and up Friday, and it is on to the weekend with the S&P advancing 9 points, up 0.3%. Dow Industrial slumped 62 right at the close, down 0.2%. NASDAQ a winning session, up 29 points today, higher by 0.3%. Thin trading today, almost 30% below the average over the prior 30 days. However, investors continue to digest this week's initial burst of corporate corporate earnings. A lot of banks this week, tech earnings next week, also sifting through that economic data and coronavirus news. Speaking of which, this headline from the Bloomberg Professional Service, U.S. cases up 2.1%, in line with the daily average of the past week. So a mixed session today with the S&P higher today, led by gains in utilities, healthcare, and real estate. As for the overall mood of the market, Dave Mazes, Managing Director at Direction, he was our guest moments ago right here on Bloomberg Business Week.
Markets are focused on the future. They're in fact writing off much of 2020 earnings and looking ahead to 2021. And when you have that much unprecedented trillions and trillions of dollars of stimulus and maybe more coming, investor sentiment has, effectively continued to be really robust.
Goldman Sachs says Moderna could file interim results on its COVID-19 vaccine candidate with regulators sooner than many investors are expecting. Moderna shares surged today by 15.9%. After earnings, Netflix tumbled. After that disappointing subscriber forecast, Netflix lowered today by 6.5%. Sad day for aviation lovers. British Airways, the world's biggest operator of the Boeing 747-400s, says it's retiring its entire fleet of the jumbo jets with immediate effect because of the damage that the coronavirus has done to air travel. Was planning to take several years to phase them out, but says, we are done with that plane. Again, recapping here, equities traded mixed today, 10-year yield 0.62%, gold up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Come on, Tim. Shake him. Let's do it.
Just move on toward your destination.
I can make things move without touching them.
Shaking all over.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, everybody, time to take a look at some of the stocks on the move in the Friday trade. I'm just doing some number crunching here to take a look at where we are, kind of big picture. And for the week overall, we did have the S&P 500 up about 1.25%, Dow up 2.3%, the NASDAQ still down about 1%, though, for the week overall. We did see some pressure, certainly within that tech sector. Year to date, Jason, we are still down just a fraction, 0.2% on the S&P. Dow is down 6.5% for the year to date so far here in 2020. NASDAQ, though, up 17% for the year overall. So where are we from that March 23 low? S&P has rallied 44%, Dow has rallied 43%, and the NASDAQ has rallied 53%. We're still off about 5% from the NASDAQ high earlier this year, and the Dow is still down. It looks like about 9%, almost 10% from its high. And we've seen the NASDAQ, though, we know, hit all-time highs this year.
You know, what's interesting is I was, as you were doing your thing there, I was looking at the year-to-date, and I inadvertently put 1 year instead of year-to-date. Don't look. Do you know what the S&P is over the last 12 months?
That's a good question. Is it up like 40%, or is it
up 8%?
Oh, up 8%.
Up 8%. Dow's down
12 months.
2% over the last 12 months, and the NASDAQ is up 28%.
Right, because we've had so much volatility, right? Up, down, up, down.
Yeah.
I mean, it's okay gains, but
yeah, I mean 8%. I mean, listen, if you threw some money in your 401k 12 months ago, and again, just sort of like close your eyes, went and lived in a cabin in Vermont or whatever,
you'd be like, okay, not a bad year.
Yeah, you'd be like, okay, cool.
Nothing happened, right?
Yeah,
pretty
like
normal.
8%. Like, yeah, I wonder what's going on in the world. I mean, it's kind of amazing in that regard.
And think about what we've had, right? Pandemic, virus, shutdown, economic shutdown, not just in the U.S., global shutdown, and then, of course,
radical existential questions about inequality, social justice, and, centuries of oppression. Yeah.
And we still have an election here in the United States.
Yeah, exactly. That's what you'd be thinking. I mean, just going back to what we talked about with Dave Mazza, like, it's hard to imagine. I mean, think about our pal Craig Gordon down in Washington. I mean, I'm sure he went into our Washington bureau chief going into 2020 thinking like, all right, let's get ready. Presidential election year, they'd be gearing up for conventions, all sorts of things right now, instead of, being stuck at home. Anyway, speaking of stuck at home.
What do you want to talk about? Yeah.
Netflix. Let's talk about it. I mean, this is a stock that went down pretty dramatically in the after hours yesterday. I mean, down double-digit percent. I feel like when we went off the air last night, it was down like 8-9%. It ended up down around 6 and change today, 6% or so. So not maybe quite as dire, but you know, that forecast, things seem to be slowing down. But as Lucas Shaw pointed out when we talked to him, I mean, they're going to have a record year. I mean, for an established company to have a record year in terms of new subscriptions, it's pretty remarkable. Obviously, pandemic has something to do with it.
Yeah, you know, we've talked about this and the expectations. Listen, when Netflix had that killer quarter where everybody was streaming and their numbers were off the charts, they even came out and said, listen, we don't expect this to be normal. So let's get real about this. I mean, this is a company that you're going to get 25 billion in revenues this year. So, and we just talked about how they are moving more towards original content and, you know, blockbusters so that people continue streaming, you know, rather than maybe going to movie theaters. So that's a big deal.
You can never say blockbuster when it comes to Netflix. Too soon.
That's so true. Funny. Major industry groups in the S&P 500. Let's take a quick scan. Utilities, your outperformers today. Go figure. Up 2.2%. Bottom of the pack, Jason, once again, we talked about energy with Mr. Kelly over at Hennessy today. Energy were down about 1.6% today.
All right. And speaking of down, volatility down about 8.7% closing at 25.57. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson, Dave Wilson back with us for his stock of the day. I tried to give him an early weekend, but, you know, he's too dedicated to not do his stock of the day. What you got?
I've got Mara GTX Holdings, Jason. It's a development stage company whose first name capitalizes the G and the T. That's designed to highlight the company's focus on gene therapies. Mara GTX was founded in 2015 and went public in 2018 at $15 a share. The ticker is MGTX. Now, the shares more than doubled within their first year of trading, but the gains didn't last. They fell below that $15 price in March and have pretty much stayed there since then. Mara GTX got a lift today from its collaboration with Johnson & Johnson's drug unit, Janssen, a partner on 3 of 6 research programs now in progress. Among them is a therapy for retinitis pigmentosa, a genetic disorder that restricts people's vision. Mara GTX and Janssen have been conducting a first and second stage study on the therapy. Now, the J&J unit said interim results have been favorable, and it expects the study to move to a third stage, the final step before seeking approval. And that prospect almost lifted Mara GTX back to that $15 price. The shares rose as high as $14.85 and closed at $14.15. That works out to a gain of 15.5%, the biggest for the stock in 2 months.
You know, I've been at that Janssen unit. They've got them around the globe. It's really where they're doing R&D, and they're encouraging companies to come in. I've been out in San Diego at that unit. You know, it's just about them having access to kind of newer therapies. It's very smart.
Check out the personal anecdote. I like it.
Yeah, it was really cool to see. I mean, they set up these labs so that companies who were, you know, just entrepreneurs who had ideas could come in, access J&J expertise and equipment. And maybe they'd collaborate with J&J going forward. Maybe they wouldn't, but it gave J&J a window into kind of what's coming next.
Yeah.
So
All right,
very
Dave
cool
Wilson.
stuff, Dave.
Thank you so much. Have a great weekend. Coming up, we're going to check in with Nick Wadhams, talk a little geopolitics. You and I love talking about this, and we love Nick Wadhams, so eager to get to that and much more. First, Denise Pellegrini's got World and National Headlines. Hey, Denise.
Hey, well, it is official. Governor Cuomo announcing New York can start Phase 4 reopening on Monday. This means sports can take place without fans. Zoos, botanical gardens, indoor movie production can resume as well, but indoor dining, no, that'll remain closed. In New Jersey, Governor Murphy reporting the highest level of virus transmission rates in weeks. And Democrat Stacey Abrams speaking out about the spread of coronavirus in Georgia. GOP Governor Brian Kemp is suing Atlanta Mayor Keisha Lance Bottoms to try to stop her from enforcing a mask mandate. But Abrams tells us that Kemp's efforts will end up hurting people.
It's going to exacerbate that spread. We know that Georgia already is among the 18 states facing the hardest resurgence.
In California, they're ordering public schools in the hardest hit counties to go online unless they can stay off the virus watch list there for 14 days. The Pentagon is effectively barring the Confederate flag on military bases. We get more from Bloomberg's Nathan Hager.
Defense Secretary Mark Esper has issued a list of acceptable flags for military installations. It does not include the stars and bars, a symbol of the Old South and of white supremacy. The move may have been an attempt to sidestep a direct clash with President Trump, who has defended the flag. In the memo, Esper writes, "The American flag is the principal flag we are authorized and encouraged to display." He goes on to say the flags we fly must accord with the military imperatives of good order and discipline. Nathan Hager, Bloomberg Radio.
All right. Thank you, Denise and Nathan. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser. So this story, I think we both keyed in on it this morning. Carol, Brown University. So they basically got rid of, or they didn't get rid of, they demoted several women's athletic teams from varsity to club, which is a big distinction when it comes to college athletics, as you know. I certainly know this from my son who plays competitive sports, that, you know, when you're looking at playing sports in college, it's a big difference. And this goes back to Title IX. And Title IX, of course, sought to bring gender parity to college athletics. Right. It's big, it's important, and now Brown University, an esteemed university, part of the Ivy League, people are saying, hold on a second, what are you doing?
And to be fair, full picture, right? The Brown announced in May they had planned to change the team's status from varsity to club, along with 6 men's teams, to spend more money on other sports. But again, there was a backlash. And I do think there's a sensitivity when it comes, because there's a lot out there when it comes to men's varsity.
Yep.
And I think women have to often fight big time to get that acknowledgement and that status and that level as well.
And the money.
And the money, right, that comes along with it.
Those
exactly,
programs.
for those programs. So I believe there was supposed to be some kind of decision today, but I haven't seen anything cross as of yet. But you're right, and we're looking for a little bit more information. I guess in June, the plaintiffs asked a federal court in Providence to enforce the pact, and that was specifically, right, we're going back to Title IX, right?
Yeah, exactly. I mean, and Brown is making an argument that they are technically going to be in compliance, or that this lawsuit is going to technically, hypothetically, take them out of compliance. So
we want to know how they came to this decision, right?
Exactly. But I think that's the most important thing, because there's the letter of the law. There's also the spirit of the law, to your point about visibility, as well as the actual resources that are there.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg CB&L Associates Properties, that is the owner of more than 100 shopping malls across the U.S., is preparing to file for bankruptcy. Stocks pushed higher today, light trading up for the third straight week on the S&P 500 index. S&P withstanding a late session swoon to register a weekly gain. S&P up today by 9 points, higher by 0.3%, ending the week at 32.24. S&P, the Dow down 62, a drop there of 0.2%. Nasdaq up 29, that was a gain of 0.3%. 10-year down 1/32 with a yield of 0.62%. Gold up 0.8%, 18.10 the ounce, and West Texas Intermediate crude fell 0.4%, 40.58 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. And we actually, maybe inadvertently, but I'm going to say purposefully, teed up this conversation when we were driving to the close just a little while ago, because we were talking about the presidential election upcoming this year in the United States and how investors are thinking about it, what changes they might anticipate. Well, lo and behold, as he often is, Nick Wadhams, he's around the corner already. He has thought about this. He's thought about it from a foreign policy perspective. He is, of course, foreign policy reporter looking after the State Department and really the whole world. We put a lot of pressure on him for Bloomberg. Joining us on the phone from Washington. This is such a great story, Nick, because it answers a question that I think a lot of us have about America's place in the world, what diplomacy looks like if we do have a change in the White House. What did you find?
Well, the big thing, obviously, is China and how a Biden administration would confront China. The Trump administration so far has essentially sought to tell China, you know, it's our way or the highway, but then it applies that same rubric to its allies. And the Biden administration, or the Biden advisors who would form that administration, argue that, listen, you can't confront China properly unless you work with allies. It sounds like a fairly traditional idea, but, you know, just this last week we had Secretary Mike Pompeo telling European countries that they have to get out of the Nord Stream 2 pipeline, a gas pipeline running from Russia, get out or stop building it or face the consequences. So you see an administration really applying sort of arm-twisting tactics even to allies as well as adversaries. So the Biden administration says they would change all that.
Well, what's interesting, too, and what I like in your story, Nick, and I have to say kudos to you and the team here at Bloomberg, because I feel like you guys have been writing these kinds of stories for the last few weeks here, and I feel like everybody else is jumping on board. This whole idea that our world has really changed big time, and there are political, geopolitical consequences as a result of it. One of the things I think that's interesting is that you say the U.S. is changing, right, because of a different administration and a president and his team who have done things very differently and kind of pulled the U.S. away from the global stage. But the rest of the world has changed at the same time.
That's right. Obviously, China is the big example of that, of becoming much more assertive on the policy stage. But, you know, the big question that we have been looking at and that a lot of people are wondering about is, can the U.S. just sort of go back to normal, such as it was prior to the Trump administration if Biden wins? Would it regain the trust of countries in Europe, for example? You know, how would that work out? And the resounding response we've gotten back is no, that in a lot of cases there is no turning back the clock. You can't just get back into a nuclear deal with Iran, because Iran, for example, would be much less trustful, that the U.S. signature on any document would be worth anything, that a successive administration could just undo it. You have the Nord Stream 2 issue. What you see is an administration now that's really leveraging dollar supremacy around the world to compel other countries to do what it wants. Well, the response now has been, okay, then let's try to figure out ways that we don't have to rely on the dollar. We don't have to rely on the U.S. economy. And that's really the area where people say, okay, this is what's coming next. It's going to be a move to hive themselves away and off from the U.S. dollar.
And so I guess, Nick, one of the questions that comes up is where will it change on the margins? Are there certain relationships that are just so strong? Or are there certain relationships where it just hasn't gone too far? What are the areas where we might see something where, I feel like everybody's always in the business of like, oh, well, that's an easy win. What are the easy wins if there were to be a Biden administration in terms of, maybe changing the diplomacy outlook in the world?
Well, one of the big ones would be, for example, a lot of the trade threats, the threats of tariffs on European countries. Right. So you probably wouldn't see that. I mean, there's a lot of tension right now, sort of under an undercurrent of tension where the Trump administration, and this is something that may happen in the second term, if he wins the second term, is going after European automobile manufacturers, particularly German automobile manufacturers, and they are not happy about that. French farmers, for example, the U.S. wants France to end subsidies for farmers. So that's a pressure point that would likely come off immediately. You would not see that sort of tension. And that could then pave the way for some sort of negotiated or middle ground road on something like Nord Stream, which is a huge issue, and the administration says they basically want all that work to grind to a halt. So a Biden administration almost certainly would ease that pressure off, and you would see an immediate reduction in tensions with the European allies. So I think that would be the first big, easy win coming out if Biden were to win in November.
Hey, Nick, just got about 45 seconds left. Is there an opportunity, too, that if, let's say, there is a Biden win come November, an opportunity, especially as China is flexing its might, and we talk about kind of the world splitting in two a little bit between China and its allies and the U.S. and its allies, is there an opportunity for Biden to come in and really fill a gap of a global power that I think is really sorely needed at this point? And just kind of quickly, if you could.
Well, it's a great question. I would say it's going to be very difficult. They've said, listen, we want to find areas where we can cooperate with China on climate change and arms control, for example. But I think we're getting to a point now where China is so powerful, Russia is playing the role of a counterpuncher. It's going to be very hard to find a situation where the U.S. is just the undisputed leader as it has been in the last few decades.
Nick Wadhams, we always get smarter when we talk to you. We really appreciate it. Foreign policy reporter for Bloomberg. He's so good at his job. And as Carol said, you got to read what he and his teammates and our colleagues are doing out of Washington, because you're eventually going to read it elsewhere. So read it first on Bloomberg.
Yeah, they've been spot on in calling this change in terms of the consequences and, what it means for U.S. and our role in the world. And listen, that is something that our audience cares about, because there are investment implications, there are business implications. So it's a big deal. All right, you're listening to Bloomberg Business Week. Carol Massar, Jason Kelly. And coming up, we've got some great guests.
We do indeed. A headline right now, San Francisco saying reopening is on pause indefinitely. More ahead. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. Carol Masser, Jason Kelly. I'm really looking forward to our next guest. His view on Silicon Valley and how we can kind of move it into the world it needs to be.
Yeah, I'm excited about the next 90 minutes. I'm excited about everything we do, but I feel like we have a very solid theme here to end up the week where it's talking about what do we actually do about some of these problems that we're facing, and we have 4 experts to talk about it with us over the next 90 minutes. So before we get to that, let's get to Charlie Pellet. He's going to bring us up to date on the headlines. Hey, Charlie.
Well, hello there, and here's what's going on. Let's recap what happened today and indeed the week on Wall Street. Winning week 3 in a row on the S&P 500 index. Today, the S&P gained 9 points, up 0.3%. We had the Dow Jones Industrial Average retreating by 62 points, down about 0.2%. NASDAQ up by 29 points. That was a gain of about 0.3%. So stocks were rising as investors digested this week's initial burst of corporate earnings. We heard from the banks, a lot of economic data, and of course, a lot of coronavirus news. New York Lieutenant Governor Kathy Hochul is calling on major Wall Street banks to make sure coronavirus-ravaged small businesses are getting all the help they need.
Those larger institutions, the ones that are continuing to thrive through this, they need to be held responsible. If you're going to take any government assistance, you better be making sure that you're keeping our smaller businesses alive, the backbone of our economy.
She was interviewed this morning on Bloomberg Radio and Television. S&P 500 today withstanding a late session swoon to register its 3rd consecutive weekly gain for the first time since December. The 10-year yield 0.62%, gold up 0.7%, 18.09 the ounce, and West Texas Intermediate crude down 0.4%, 40.59 a barrel. Sources tell Bloomberg Rosetta Stone is exploring strategic alternatives, including a potential sale of all or part of its language and literacy software company. Rosetta shares down today by 2.6%. Tesla kept growing in China last month, with registrations of its electric vehicles jumping to a record in the world's largest market as the coronavirus outbreak receded. Tesla shares little change today, up by 0.01%, up by 20 cents. Recapping equities mixed, S&P up 9, up 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right. Charlie, thank you so much. Really appreciate that update. Now, as TechCrunch reported last month, our next guest, Lo Tony, has some ideas about how to really bring venture capital into the 21st century. That story caught our attention. He was a partner at Comcast Ventures, then GV, which is, of course, formerly Google Ventures. And he now is founding managing partner of his own firm, Plexo Capital, and he joins us on the phone in Los Angeles. Lo, it is nice to have you here with Jason and myself. Welcome to Bloomberg Business Week.
Well, thank you so much for having me. It's an honor to be featured.
Well, you know, we have been talking a lot about the investment world, obviously the impact of the virus, but we've also been talking a lot about the need for, you know, diversity and inclusion within the investment community. And we've done a lot of stories about what's been going on in Silicon Valley. First up, what's been your experience working within Silicon Valley? Because it tends to be still a lot of white men making decisions.
That's true. I think it's commonplace for someone like myself, a black male. I grew up in Oakland, California, went to a historically black college in Hampton, came back to go to Cal, and I got used to being the only black person in the room. It's just common. So I think that's a common experience that many of us have, but I've been increasingly hopeful about the changing complexity that I've seen in some of the generations that are coming up behind me. And I believe that we're at a point where we've reached an inflection point where we've been able to shine a light and visibility, and I'm pragmatically optimistic about the prospect moving forward.
And so there are a number of aspects, as you know better than we do, Lo, in terms of the investing landscape, the venture capital landscape, sort of where the money comes from, who invests it, and then where it goes. I know you've been working on all aspects of that. I do wonder if you could tell us a little bit more about what you're doing around the general partner level, because I think you are rightly very focused on that piece of making the investors not just what Carol described, which is, a bunch of rich white dudes making decisions about where the money goes.
Yeah, it's interesting. When I was a partner at Google Ventures, GV, one of the things we wanted to do was to get access to more deal flow. So we had this really interesting thesis that when we started to look at some of the smaller, earlier firms that were investing at that initial check level, we saw much more diversity than at the larger firms. And so we came up with this thesis that, wow, the indirect path that many black venture capitalists have, like myself, produces really interesting networks and provides a different lens to be able to evaluate opportunities and entrepreneurs that might not have the same understanding traditionally on Sand Hill Road. And so we decided to make investments into these venture funds to get access to their deal flow. And I took that one step further and created Plexo Capital and expanded to not only black GPs, but other GPs of color and female GPs. And really it was an alpha strategy, right, to identify inefficiencies and information and identify opportunities that others were missing. And what I also noticed was that, wow, actually this has a much broader implication to the vertical ecosystems for black entrepreneurs, for people of color that are entrepreneurs and female entrepreneurs, which is if we can get capital into the hands of a diverse set of investors, the data tells us that their portfolios end up being diverse.
Right.
So if they've got diverse portfolios, those diverse founders are going to hire diverse teams. And if there's a successful exit that creates wealth generation for those employees, well, lo and behold, you have a diverse set of execs that are going to write angel checks, likely to diverse entrepreneurs. They'll have the financial stability and comfort maybe to take that risk and start their own company, or maybe some of them will even become venture capitalists themselves. But more importantly, it starts a wealth creation pattern. And then wealth is also transferred back successfully to those initial investors. And if they were diverse, they go down the wealth creation path. And then capital is returned to the original limited partners or the investors into those venture funds. And once those limited partners see that positive signal of dollars coming back, they say, wow, this is working. Let's deploy more capital. And so that creates this flywheel within that vertical ecosystem. I mean, it's not dissimilar to how we see geographic ecosystems develop outside of Silicon Valley in places like Seattle, New York, and Austin. But in this case, it's vertical around black entrepreneurs, female entrepreneurs, or other people of color. So I feel like our model, even though at the outset the purpose was to deliver alpha and increase returns, it has this additional benefit of being able to help to accelerate these ecosystems on a vertical basis.
We're going to talk more about that. And I love this idea of wealth creation because, we talk about this being ultimately a financial and, poverty issue in terms of bringing more blacks and minorities kind of into the existing structure. We're going to continue talking with Lo Tony. He is the founding managing partner of Plexo Capital, and he's joining us on the phone in LA. Right now, let's get back to world and national news headlines and back on over to Denise Pellegrini.
Hey, Carol, thank you. So starting on Monday, sports will be back in New York City, but without in-person fans. It's part of the Phase 4 reopening that Governor Cuomo announced today. Indoor dining will remain closed. Outdoor dining in the city being expanded, though. And in New Jersey, Governor Murphy is reporting the highest level of virus transmission in weeks and says he's eyeing a spike in cases in Pennsylvania. California is ordering public schools in the state's hardest hit counties to go online in the fall unless they can stay off the virus watch list for 2 weeks. Governor Newsom also imposing a mask rule.
All school staff and students, all staff and students in 3rd grade and above must wear masks. Students in the 2nd grade or below, we strongly encourage wearing masks.
And California is seeing a dramatic increase in new cases. Florida Governor Ron DeSantis says things are improving in his state.
The percentage of new cases that are positive has stabilized and even, maybe slightly down from where it was 2 weeks ago, where we were pretty much 14 to 16%. Now we are probably, more of like, 12, 13%.
And DeSantis says Florida is testing more than 100,000 people a day. Supreme Court Justice Ruth Bader Ginsburg says she intends to remain on the Supreme Court even though she's being treated for liver cancer. And Brown University being ordered to turn over documents explaining why it eliminated 5 women's varsity sports for the spring, but ended up only eliminating 3 men's teams. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. I'm Denise Pellegrini.
All right, Denise, thank you so much. Well, we're going to continue our conversation in just a minute with Lo Tony from Plexo Capital. But since we're talking about Silicon Valley, let's talk about a very extensive investigation by Nico Grant and Ian King, 2 of our favorite writers based out in San Francisco, actually, talking about Cisco's systems, which ended up firing some of its employees for some racial comments made during a diversity forum. There was a backlash to Black Lives Matter, and some folks posted things internally, sent some messages that led to their dismissal, Carol.
Yeah, they had a video conference, an initial video conference on June 1st. That was following, of course, the killing of George Floyd by Minneapolis police. CEO Chuck Robbins was there. He spoke with Ford Foundation President Darren Walker. He is Black. Brian Stevenson, a Black lawyer and author who founded the Equal Justice Initiative. They did that in front of all of the 30,000 employees at Cisco, and they talked about race, and then they continued those conversations in subsequent online global staff meetings. And apparently, like, one worker wrote in comments during one of the virtual all-hands meetings, Black lives don't matter, all lives matter. We got some of these screenshots here at Bloomberg. Another said the phrase Black Lives Matter reinforces racism because it singles out one ethnic group. Well, Cisco said it fired a handful of workers for inappropriate conduct because it will not tolerate racism. We haven't been here able to confirm the identities of those fired or been able to name them, but apparently Cisco taking some action as a result.
And I would recommend folks read this story. It's on Bloomberg.com and the Bloomberg terminal, because it also talks about some similar incidents over at LinkedIn that were first reported by the Daily Beast. And so it's a really interesting and in-depth look at what's happening in Silicon Valley specifically and in big tech companies as everyone sort of grapples with these conversations. And the conversations get very raw and heated and uncomfortable in many cases. And so it's a really important and interesting look at this.
All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. We'll come back, continue our conversation with Lo Tony of Plexo Capital. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Another weekly gain for the U.S. stock market. 3 in a row for the S&P 500 index, with the S&P withstanding a late session swoon to register another weekly gain. First time that has happened, by the way, since December. Today, the S&P up 9, a gain of about 0.3%. Dow Jones Industrial Average dropped 62 points, down 0.2%. NASDAQ up 29, higher by about 0.3%. Investors again digesting this week's initial burst of corporate earnings, economic data, and coronavirus news. 10-year down 2/32, yield 0.62%. Gold up 0.7%, 18.09 the ounce, and West Texas Intermediate crude up 0.4%, $40.60 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie. Oh, sorry, Jinx. I'm jumping to you because I want to get back because I have a follow-up for Lo. Lo Tony is with us. He is founding managing partner at Plexo Capital. He joins us on the phone in L.A.
It's a good sign, Lo, by the way, when we're fighting over a guest. So that's how you know we're excited and not just like sitting back and being like, you go, I don't care, go.
So, Lo, what's interesting is you just described kind of this strategy for identifying opportunities, creating wealth creation, and you talk about creating this flywheel. So what are the signs that it has really worked in kind of what you envisioned?
Yeah, the key signs are, without question, the increasing the dollars that go into the Black entrepreneurs of color, female entrepreneurs. You know, the numbers are so low that, you know, it's really not hard to increase them. But we are seeing promising signs. You know, we're seeing more firms led by Black GPs, people of color, and women at these venture capital funds, and we're seeing more dollars go into the companies that are diverse-led. Ultimately, the barometer, the yardstick, the best way to measure is when we start to see companies that are getting acquired or that are going public. I mean, the stepping stones are, you know, get the initial investment, get some follow-on investment, companies start to grow and scale, hire more employees, increase their revenues. But, you know, ultimately what we need to see are companies achieving liquidity via the public markets or by a large-scale M&A transaction.
Well, and Lo, it's interesting. I was thinking about it as you were describing that flywheel in the early part of our conversation. I mean, that's the PayPal mafia model, right? I mean, that's exactly sort of what gave rise to this whole network of companies and angel investors that has been at the center of basically the last 10 to 15 years of Silicon Valley, right?
Yeah, absolutely. And, you know, again, I like using the relationship or the analogy to a geographical ecosystem. And that's absolutely right. You know, we believe that there are network effects inherent in deploying these types of strategies. And I think the PayPal mafia is without question one of the classic case studies of, you know, what happens when a group of super intelligent and driven people came together, and then the relationships that spawned over time. I mean, you just see a lot of companies that came from that DNA.
Right. So just to follow on that briefly, Lo, I mean, one of the things that we know about Silicon Valley, and I was just reading a long, I believe it was on Medium, post about this is, you know, serendipity has been at the heart of this, you know, these sort of like inadvertent collisions that happen either at a company or a neighborhood or whatever it is in what's a relatively small geographical area there in Silicon Valley. In this remote world, how do you ensure that all the right people are getting together?
Great question, and I think we need to be more intentional. You know, the good news is that there is no one geography that has a monopoly on the best ideas. Yeah. And we're seeing ecosystems develop in other regions, which is a good thing. I think we have become more comfortable within Silicon Valley with distributed teams, and there are many companies that have a portion or all of their team distributed. So I think now everyone else is really kind of catching up. And for a while, my mentor, Ken Coleman, used to always tell me, if you want to be an actor, go to LA. If you want to be an entrepreneur in tech, you go to Silicon Valley. And the good news is, as we begin to see more of the building blocks in place regionally, whether it be research-driven institutions producing STEM graduates, whether it be kind of a few existing companies that have done well, where there's a well-trained workforce available to go and work for an entrepreneur at a startup, and the availability of capital. So I think we're starting to see more of those building blocks in place. And the good news is when you look at some of these ecosystems like Atlanta, for example, or even New York, right? They are more diverse by the numbers when you look at ethnicity than in Silicon Valley. So I'm very encouraged by the fact that, we're getting to a point where good companies with great entrepreneurs and great teams can happen outside of Silicon Valley.
You talk about pipeline, you talk about building blocks, but so much of this, Lo, has to start really kind of at the very beginning in terms of where kids are born and getting great educations and kind of starting early on a path that enables them to get into your pipeline eventually to maybe think about starting a company, to be able to make a pitch for money. How do we improve that?
Yeah, the thing that I'm also really passionate about are the historically black colleges like Hampton University, because even though they're only 3% of the educational institutions in the U.S., they make up about 10 to 15% of all of the bachelor's degrees earned by black students. More importantly, 25% of all the black STEM holders receive them from an HBCU. HBCU grads make up 21% of MBAs, 33% of PhD holders with STEM degrees. And then you see that translating into the professional ranks as well. 50% of lawyers, 80% of judges have an HBCU degree who are black. On the VC side, this is really interesting. 26% of black venture capitalists went to an HBCU. So even though by numbers, absolute, the number of HBCUs are small, and even the number of, or percentage of black graduates, 10 to 15%, that's not huge. But what ends up happening is those recipients of HBCU degrees end up becoming leaders at the graduate level and in the professional world. So I'm a big proponent of making sure that we can increase the endowments of the HBCU so that they can keep producing great leaders.
And so how do you extend that mode of thinking to your colleagues across the venture capital landscape? Is it just sort of showing that talent pool and maybe sort of revealing it in a more meaningful way?
Yeah, there's a lot of great initiatives happening. So there's been a great number of my colleagues from the venture capital world and the larger funds that have reached out trying to understand how they can improve the diversity of their teams. And one of the things that we're definitely promoting is the availability of internships and even scholarships geared towards HBCU grads to be able to enter the world of technology. So either working for a portfolio company of a venture capital firm or actually even going and working at the venture capital firm itself. So the good news is, and I'm open if anyone wants to send me any recommendations around, hey, we want to host a student on an internship. I mean, we're trying to organize as many of those as possible, working with great organizations like HBCU VC, for example, and others. So, that's how we're thinking about this. Now, look, there's great black talent everywhere, but I went to a historically black college, so kind of that's where my focus is. And I'm
absolutely.
More than happy for others that are black, that want to do the same thing at, their schools, whether it be the Cals or the Stanfords or the Harvards of the world. I encourage them to do the same thing.
Well, so great to catch up with you, and I hope we can, in a few weeks or so, check back.
Okay, ladies and gentlemen, it's time's up for today. Anybody who followed us this week did really well. On Monday, we made a profit £1,200. On Wednesday, we did profit £2,200. And yesterday, we profited £1,400. So that's not bad, right? I wish you all the greatest weekend and stay safe. And I'll see you all and I'll speak to you all on Monday, as always, from 8 o'clock. Have a great weekend. Bye-bye.